right, folks. Let me turn this down. Hold on. Oops. Give me 1 second. Sorry. There we go. All right, and then this has to stop. There. Okay. So we are. This is Red Ben. Hey, buddy. How you doing, Nathan? We're about to watch the Fomc decision. I'll come back to this if you want to get a hold of me or my coach. This is the contact info. You can come back to it. So let's just see what's going on. So I'm just gonna. It's gonna be fast. So let's just look. This is NQ Renko chart. I know it's got a lot of lines and stuff. If you aren't familiar with it, my apologies. It's confusing, but yeah, I really want to see. Now, obviously, at the point in a minute when the here we go. So it's going to start moving very fast, and we're not obviously going to be able to interpret anything. On the right here, I've got a higher tick chart, 40 tick. So that kind of shows us like where the market's been, and you can see we got a pretty big drop, and then they made a higher low here. If this low holds, it's going to be really tough to go any lower. Whoops. I probably shouldn't move that. There we go. It's going to be tough. Jeez, I can't seem to let go of that. Okay. I think that's good. How do I? Okay. Yeah, it's going to be hard to go lower without new information, but if something is said in the conference in half an hour where the low is getting taken out as a result, or sorry, the low is down here, the low of the day, on the candle chart. Here, let me show you. So on the candle chart, let me just extend this. We've been consolidating for a number of days, and the value area of that consolidation, which I've talked about in many of my other videos, is generally considered fair value, and it's easy to sweep through if you leave the area and then return to it, because basically it means buyers got trapped up here and sellers got trapped up down here, and so you just sweep right through that value area. I had a nice short as a result, and we caught the long. What day was it? Yesterday? Yeah, which was here. The VPOC has shifted down, but the VPOC, that little red line, it's right at a voodoo range right now, but it used to be up here, and this was a nice VPOC test, but it's now shifted down. And interestingly, I pointed this out to a member in the room yesterday, and we actually got puts. I'm already out of them. It was just an overnight play. I got it. I actually had a pretty good exit, but at the end of the day, I showed him how, when you look at this profile, well, how it was before. I don't want to get too distracted here, but before, at the end of the day here, this profile was very asymmetric. See that? How you had no volume down here and then a bunch of volume up here. So the theory is that most consolidation ranges will eventually have a normal distribution, but the ones that don't, if it leaves the area and looks like this, what generally has to happen is you need to come back and test this area with no volume to make sure that there's natural buyers here, and that the buyers that did show up above here that pushed it through wasn't just a result of short-term trapped traders. So it's very normal to eventually come down here and test this, basically what's a low volume node, which has already happened. So the trade that I was looking for overnight has already occurred to the downside. And if you look at the bigger picture, well, I guess you can't, but here we have retraced all this poorly auctioned, well, not all of it, but most of it. This poorly auctioned portion here, which also had low volume relative to other days, which totally makes sense that would be a spot that the market kind of wants to go check on, and if there's natural buyers underneath it, you'll get a lift. That's what happened. But the fact that we rejected here suggests on the lift. Well, technically it was after earnings. It was looking pretty strong at the end of the day, and then Google and Microsoft came out and rejected and that we got this nice overnight rejection at the voodoo range level. But it suggests that there were enough buyers up here. If you look at all the volume at the highs, there were enough buyers up there that, and probably in maybe this one or here, this move up collected enough buyers that when we return to it from below, they probably became sellers. And so it was likely these guys. So they might have sold and then it ripped and they're like, you know what, I better be a buyer because it's going higher. And then they all get like offsides. And when it comes back to the best spot for them to exit, they go ahead and sell. Now, what's interesting is because this happened overnight, a lot of them didn't have an opportunity to sell. So what you get is when the market opens with a gap down, but within the previous day's range, you'll get a retrace of that previous day's range, and then you get to see if there's any interest lower. And today there wasn't initially here. There was not any interest back in that value, fair value area here. Here we go. And so we got a bounce, and then they rejected off of this. This is just a purple pivot, the decreasing range and volume. I explain how to build them in my Voodoo Range video. If you search on YouTube Voodoo Range, you'll find it. And you can see that when the market is not full of a lot of momentum, it will act as support and resistance. And so that then became now the value area high of this consolidation. And it rejected, so that offered a short, and then it came down, tested below, but couldn't break this low. And so they tried to bounce, and then we've returned. These little dashed lines are just fib levels drawn off of the Voodoo Range level. So this one's anchored at this Voodoo Range level down here and the high. They're not brick walls or anything, but it's a kind of a measured way to see like what a normal move would be, just like kind of like the Voodoo Range levels, but like between range levels. It's like I said, like you can't just put a buy order here and make money. Like that's not going to work. But when you see them reject it like this, at least for me, if I was already bearish, that might help me make a decision. Now, keep in mind the fair value here is, and the VPOC is going to create choppy trading around the VPOC. So that used to be up here, and that's why it was choppy here and choppy here. Is actually shifted lower today because of all this selling. So now that it's down here, we're going to get choppier trading in here rather than just sweeping the value area. But if we can lift, and especially if we bounce off of this or off of the low volume, the value area low, you can actually shift all the way back up. So that was kind of my expectation. If on the other hand this is given up and it becomes resistance, well, then this low is going to get tested almost for sure. And then if this level, 15,525, it acts as resistance, we could definitely go lower. But my assumption is that we won't without some new like bearish information, because that's just usually how markets goes. They tend to go higher without like people being surprised by something. But you never know. You can't trade based off that assumption. But like if I just had to like, gun to my head, is it going higher or lower? I'm always going to say higher unless I actually see an opportunity to go lower like I did last night. If it's not for something like that, like, yeah, just assume it's probably going to eventually resolve higher as long as the higher time frame is bullish. This obviously inverts when the higher time frame is bearish, then everything kind of flips. But usually bull is just easier to get extensions than bear. Okay, so let's see. We got the decision. I haven't actually looked it up. It appears that it's exactly what we expected. What was expected is a 25, a quarter point increase. So I assume that's what happened. Very muted response, though, surprisingly. Like, very muted. I'm not an hour early, am I? No. It almost looked like nothing. So what we should have is in 30 here, Fed raises benchmark rate 25 basis points, now 5.25 to 5.5. Target range will continue to assess additional information. Fed to consider extent of additional firming to curb inflation. So they're basically saying like they're not on pause, right? Because they had said that they took a breather earlier, but that we would probably continue, and the rate markets were pricing in continuation of the increases by 25%, and that's exactly what we got. So now it is high, right? Like 5.5% is higher than it's been since 1990s, maybe. Long time. Definitely more than maybe 20 years, let's say. So you know, it yeah, it is higher, but when that's what people expect, you just don't get much. You don't get much change in the market because it's basically already priced in, is what that suggests. And so, because of that, anybody who was short, expecting something different, might exit, and you could see like a grind higher, especially considering the fact that we put in that low and couldn't get below it here. And now the decision came out and we didn't even attempt to take it. Now, sometimes you'll get a grind up and then we run into some resistance and then it just evacuates, especially if during the, what's it called, the press conference, because while the decision might have been baked in, there may be other details, how he answers questions and stuff that could move the market one way or another. But again, my assumption here is we're going to go higher, probably back to the value area high of that consolidation, which is 632. So we're probably headed up here. Now, had I been paying attention, we can look quick and see if there was a high odds trade signal. The number one that I see right away, if we had a heavy buyer at the low, we actually didn't on this time frame. We could almost trade on the 15, it's so slow. If we would have gotten a blue arrow up down here, then, or anywhere to the left and lower, let's just see, do we have one back here? No, not on this time frame. Interesting. Okay, so no big buyers at the lows to support this area. Kind of surprised they're able to rip through without that, but that's okay. Sometimes it just on this time frame it might not like line up right, but normally if it's bullish, you can get a triangle down, the red triangle, and then a triangle up, which are either going to be white or else they're going to look purple because it's got two triangles on it, signaling that like you have a trap seller to the left of you and below. Getting this is usually a sign that the buyers are trying to push the market, but you have to consider support, risk reward before you enter the trade right there. But on this pullback, it would make sense to put your stop down here and enter during the pullback if you were bullish after seeing this triangle up that got above this triangle down, especially when this one's purple. In general, a very easy way to read direction with the algo is you have to ask yourself, are we above purple bars or are we getting below pink bars? So you can see when you're bearish, you're getting below pink bars. And then when you're bullish, what you'll see is starting to print above these purple bars, and pink bars then act as support rather than purple bars acting as resistance. Now, the reason that this one didn't, like, you got above this purple bar, right? But the reason it didn't go right away is because it ran into other purple bars over here. So this becomes choppy. But once you've kind of run through it once, and then if this holds, you can get an apex trap trade. So this would also be a decent entry, either on the star or the triangle up with the plus sign. Both of those are fine because you put in a low, tested below it, and then came back into this bar's range within one bar. And if you want to wait for the triangle up for confirmation, that's a pretty good entry. And then your sell goes to the low down there. Let's see, you said secular decision making. Yes, right. Yeah, that I agree with you. I agree. That is usually how it works. Yep. It at least can simplify things. It's not like you can just trade every single time you get above a purple bar, but if you're not sure, am I bullish or am I bearish, like on any time frame, like the first thing you can look at is like, okay, here's a big time frame, and are purple bars acting as are we getting over purple bars, or are the purple bars acting as resistance? And then are the pink bars, are we able to get under pink bars, or are the pink bars acting as support? So here, by this leg, you can see the pink bars were acting as support. So you don't want to short into that. So this, even though there's a star there, which means there's an aggressive seller, he is actually a candidate for getting trapped, what we call stuffed or buried. This one also got buried or stuffed, but you wouldn't have necessarily guessed, unless you saw the higher time frame, you wouldn't have guessed that that one would have gotten stuffed because he was actually underneath at that point, purple and pink bars. See that? But if it's bullish, like you at a higher high and a higher low, oftentimes getting that star is just an attempt to turn the market, and then when they lift over it, they're usually buried. And then this star here and the wick that is created when it goes just a little bit lower but can't make it 40 ticks lower and reverses, that's why it's a bear bar followed by a bull bar, that will now be support. And so now if you can get an aggressive trader to show up in here to the bull side, you may get an opportunity. And what we would really want would be like triangle down and then a bull bar and then triangle up down here. That would be ideal. Otherwise, another star followed by a triangle up, so something just like this would work. The diamonds here are generally not great entries when it's not ranging. They do better at like the end of a big extension, but you can use them for their location, like later on, but they're not. The reason Simon took the speed bars off of the main, like the training perform algo that everybody uses, is because they aren't as powerful as like stars. So if you want less signals, that's the first one to remove. And like I said, in the room, he has removed them. Looks more like this. I've added the arrows though, because I find those super helpful, but they only work during slow markets. So I would expect that the arrow trades, if this eventually starts to speed up, the arrows will not necessarily hold the market back. Usually the way the arrows work is if you can trap one, first of all, like once he's been buried, I mean, he's also a star, but once you get above him, that's usually going to be support because it's a sign of a lot of sell flows coming in. And so if you get above those guys, it's going to be hard to push the market lower. But then also if you get what I was looking for before here, I think it probably shows up on the 15 tick. Let me check. If at the low you get a buy flow, blue one, they're blue now. Where? No, nothing. Interesting. No blue arrows up. Surprised. I don't really know what that means, that we haven't gotten any real buy flows. That it really does surprise me. Usually, if it's bullish, you will get like some buy flows at the low, and then that becomes support. But if you get under them here, we did get under one right here. So see, they put in a blue arrow way at the high, trying to like continue this trend, and then they got below him. And if he then acts as resistance, it's bearish. And so now triangle down, once you get below this, triangle down like this or this has the potential to drop the market, because this guy with a lot of buy flows is stuck at the top, and there you can see them defending, and they keep trying to lift it, but they can't, and they don't get any more blue arrows down here, which is what usually works to reverse. And then arrow down or triangle down right at the bottom, and the triangles are saying like it's an aggressive attempt to continue the market lower for a triangle down, whereas the stars is like an aggressive attempt to like reverse the rotation. So but they're somewhat related. So like here the star and the X actually is similar. You've got a down bar that, like, if it's bearish, you'd get continuation here and you'd expect sellers to come in, but instead we actually had an aggressive buyer come in here and try to reverse that rotation. And so if it's bullish, you can actually enter there for a scalp up, but you have to be very careful about trading that way if you're trading counter trend, because it's basically like a trend following signal. You could think about it that way. The really best way to use them is like I showed before, where you trap one and then you get above it and then it becomes support, particularly in slow markets. So like this, getting above him. Now, as long as that low holds, if now we test in there and get triangle up, it could lift out of there. Of course, if they don't defend that range, well, that would suggest that buyers have kind of given up. So we shall see. I can't believe how slow it is. This is really unusual for FOMC. Really unusual. Like, I literally thought maybe I was like, it was the wrong day or something. And the background colors is delta divergence, basically. So it's saying that even though this bar and this bar and this bar, even though they closed lower, they actually had more buyers than sellers in the bar. So that alone isn't really enough evidence to make a trading decision. But the general rule is, if you get them and the location like makes sense for going that direction, so like they're in position for a sell, and the very next bar continues lower without being pink or purple, usually you get an extension. But if you put them out of position, like at support, when the sellers come in with delta divergence at the low at support, and then you get above them, you can get a quick scalp in, because basically there were buyers in the wick, they closed lower, and the buyers defended that. So it's a sign that even though it closed lower, they're like hidden buyers in there, and once they push, the sellers that close this are going to get stuck. So it's usually for smaller like short-term trading, but like sticking them at the wrong side. So like if this guy closes with the blue, and that would mean it was a bullish bar, but there were more sellers than buyers in the bar, and then we took that level back, that's pretty bearish because of the location at resistance. Whereas the exact opposite, the orange ones down at support, like this. So see how there were actually hidden buyers in here, but they went lower. So really what buyers need to do is like free them. And you can see sellers tried to defend and then failed. And then you get an immediate rip up. So it's not necessarily going to tell you like what the higher time frame is doing, but it's very helpful for exiting trades. Like if I'm in a trend following trade and I'm trying to figure out like where do I trail my stop to, well, if I'm bullish, if I'm long and I see a blue divergence bar print bullish at the highs or at a resistance, I know if they put a bar underneath that, I'm probably done with the trade, because they had sellers in that bar and then they got follow through. So even though it closed bullish, those sellers had success, and that just doesn't happen very often when it's bullish. So it's not necessarily a high odds trade entry, but it definitely gives me a feel for like how strong the momentum is. And like this was a good example back here, like where if you were short up here, see this one, if you were long and then you got this and then you got a regular bar underneath it, you don't want to be long anymore. Right? And so here you're not worried about your sell because you're going lower. But if you got above him, we would think that whoever was bearish in here must not be bearish anymore. So they acted as resistance right there. That's cool. So we'll have to see. If they can get above him, it means that those guys are like there's a sentiment has changed at that price level. You could think about it that way. I would not be surprised if we just kind of wiggle in here until he starts talking. I just can't believe how slow it is. Crazy. Um, so if you did think that this looks bullish and that, or neutral, uh, the primary location for a trade setup would be down here. But the problem with that is you have these big sellers here that could act as resistance. And so I think one of the reasons we're chopping here is that they're struggling with the fact that you have so much activity in here. It basically just got a lot of interest. And so while they got above it, if they don't hold this, if buyers don't hold this level, then these guys got trapped and then released. And that's actually pretty bearish. So if that happens, we're probably going to come down to the next point of where sellers got trapped. But we have to get volume down there, not just price. Like getting a wick down there that's not really enough to make a trade decision. And that's why I have that yellow line on there, is that's the VPOC of the bars. So that's where most of the volume, the price with the most volume on the bar. Obviously there's volume in all the prices, but it's good to know, for instance, that here, most of this volume was actually up here. So even though we have gotten price underneath this big seller, most of the volume was actually within his range. So buyers still have an opportunity to sort of hold that level, even though we're trading below it, because we haven't necessarily put in a ton of volume below it. If we do, and they close bearish, he's done. And then we'd want to use that area as a sell location. So if this guy closes bearish, then retraces can be sold, is usually the way I do it. You could technically just sell this, and sometimes with the way down, the down direction, it just doesn't retrace. But the higher odds trade would be right here. Sell that, retrace. But like I said, you don't always get that opportunity. Okay, so did they get? It's got to be below this. Oh, I see this. So it's just purple bars. So purple bars and pink bars are the inverse of that, is a sign that the price is moving, but primarily due to low liquidity. So which results usually from buyers and sellers pulling their orders from the order book. So it's a lack of liquidity that's causing. There we go. So now it's definitely bearish because they got under that. So now bulls are going to have to trap that guy to have any chance to lift this. So if I get a wick and then like star down, I could get a continuation trade to the downside. But this, and this, all those big sellers have now been potentially trapped. So they're going to need to free them to have any chance to lift. So let's see if they give us an opportunity here. Now, if it's just one bar like this, they could technically lift it, and a triangle up here in a very bullish market can actually be a squeeze. But if this is immediately beat, it's a short. So you could go either direction here. You could try, if they get the triangle up, so this could lift, although I don't like that it's pink, because it means sellers just kind of gave up there. And we don't really know if that's going to continue. It might. But what I really want is a bar that's not pink, because, these guys, the big volume players, are likely to at least try to defend those areas if they think, what did I do? Did I just move this? If they think they are going to have success. So, yeah, it's more dangerous to trade into their range. And so to do it, I want aggressive lifting. I want to see, like, not just a lack of liquidity, but like maybe a star or like some other sign, or I need like a triangle down here or a star down here so that we can trap somebody rather than just a regular old bar. If it was super bullish, this will work still, but I'm not convinced that it's super bullish, primarily because these guys look like they got trapped. So it doesn't look all that convincing that, like, and I guess maybe that's not objective, but if you look at the higher time frame, right, it's just kind of choppy. It's not super bullish. There's not, you could probably use like this is like a volume momentum signal or indicator, and that clearly is not very bullish. So like I don't need to take aggressive trades to the upside here, but if they reverse here and give me a star down, it's not valid till it closes. Keep that in mind. There's nothing to do until it closes. But if it did close bearish, it would be an indication that they're continuing lower. If you wanted to wait for the triangle to the downside, that's your higher odds trade. The only issue now is, do we have risk reward to support? That'd be the problem. Let's see if we get a star here. That might do it. We're right at that VPOC though, so it's probably going to get choppy. Oh, and he's just about to speak. We probably shouldn't trade here. Let's see if they close it bearish. I mean, they may just lift it if he's got nothing negative to say. Because in a bullish market, ring followed by triangle up is generally pretty good at support. I just don't have a lot of confidence that this is bullish, but perhaps it is. And like I said, the reason I feel that way is because I've got sellers up here, and I know like for a time they were trapped and then they were released, and they almost always defend that. Because like, think about it, like if you've got a big account and you are like trading with a lot of size and you're off sides, and then it comes back to your entry and for some reason you decided to actually get more aggressive, not like become a buyer, like that suggests that they're pretty committed to that level being bearish. So when it comes back up to them, I would assume that they're going to defend that big, because I mean, they didn't, if, let's put it this way, if they change their mind, these guys, and at this point thought it was bullish, when it comes back the first time, they're going to be buyers. So when that doesn't happen, I'm going to assume that these guys are still bearish. And since I've got no buy flows really, interestingly, then I'm going to assume that this is resistance, but could be wrong. And so the problem getting in here is you might just run into a wall. Now that's interesting because that diamond means this bar actually had a lot of volume. So that is a little surprising. Although we are at that VPOC on the consolidation range, so it may not actually be a sign of strength. It may just be that we're at an area where there's lots of people with orders. Oh, maybe they're just going to lift it right through it. Okay. To the back of it. And do they just squeeze? You'd think that this would be a decent spot for a short. I wish they got a pink bar up here rather than here, because that could actually act as support. But this is not what I expected. Although I really didn't have any reason to be bearish, but price action for a moment looked like they were like, what's it called? Like defending that level. So it, but the thing is with these FOMC conferences, like he could just say something people don't expect and it just goes 20 points or more. Like, yeah. Which is why I'm not going to trade with my real money account. The performance account is not, that DOM is not even open. Like there's no way I'm putting real money on the line when the only reason it's moving is primarily because of Jay Powell talking. But it's still fascinating. Oh, there we go. So that now they're trying. Oh man, I missed it. That was fast. So if we get a retrace into here, I can try to sell it right there. That's actually a pretty good location if it's bearish. Here we go. We'll try it. It definitely might stop, right? It definitely might stop. But the stop really belongs up here. But the only reason this might work is because the fact that this was resistance. We returned to it, they defended, and then got the triangle confirming continuation. And see, it's got two triangles here, which tells me that on the way up, there was like a vulnerable buyer who got trapped. So that usually means that this high will get defended. Um, or no, that high will be harder to break. Let's say that. So it should be a pretty good spot to put my stop. That's what it really means, is that this high anywhere above that, like 94.50, let's say, is probably pretty safe. So we'll see. What I really want to see is them to just reject here immediately. This one got a lot of volume, so I really don't want to see a VPOC up here now, because they're actually putting in big sell flows and then big sell volume after that. So this is not what you want. You don't want them to just lift right through it, because that suggests that you're on the wrong side of the trade. Yeah, this is probably going to stop. That sucks. We'll see. You never know. I mean, it can come all the way back there and still reverse, especially if, on a FOMC day. But if it does just take this short right out, it's not bearish. Let's put it that way. So I'm kind of paying for information here, but there's definitely an opportunity here to drop it. But if this one turns white like that, now if they close it bullish, I can just get out, because then they'd have beaten that bear volume. Yeah, we're out. So we could actually flip there. Damn, I'm too damn slow. You could actually flip there. At least I got out before the squeeze. But that triangle up after the big bear, the big seller, means that now momentum's going higher. So I could have actually reversed there, but I didn't. I just exited. But like I said, at least I didn't lose a full R there in my what's it called, the Apex evaluation, which is like paper trading, basically, just trying to demonstrate that my strategies have like positive expected value. But this is exactly what happens when it's bullish. So I expect that dips can probably be bought now, as long as we get a buyer showing up down there. But yeah, the problem here was that big seller. See, it looked fine here, but then they got a big seller, and so you really can't give that up if you're expecting it to go lower. It just won't work if you get above them, because the bigger the volume, the more sensitive they are to price movement, because nobody wants to lose a lot of money, and the bigger the sensitivity to price movement, the more likely that you get one of those squeezes. So oftentimes getting like this too, like this is the same thing as the orange one, only in reverse. So they put a big buyer at the high, and they tried to take them, but they haven't put a real bar, only a purple bar. So we could actually buy this, and this should continue to lift. The only problem is, there we go. So I immediately got 10 points just out of like nowhere. So I bought it because if it was bearish, this big volume bar would have gotten beaten by something more than just a purple bar. The purple bar is just buyers pulling their orders. If it continues for one more bar, or if this wasn't purple, it could definitely be bearish, just like we saw here, where the big sell volume bar got beat by a non-pink or purple triangle bar, right? So this one's got a triangle too, and it's not pink, and we got most of the volume above that. Let me just move my target a little higher, because this could, oh, I hope I don't miss it. Go, 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 go. Shit, 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 go. They might hit my target. I always try to take 10 and 30, but in this case, we can actually target a little higher. Unless, yeah, they should keep going. Should be able to lift through that volume area high, which is like, if I can get 28 or 30, I should probably take it. It can keep going. But you can see that, while you might be wrong paying for information like that, as long as you're prepared to flip, you'll be making the money back. Okay, so anywhere here would be totally reasonable to exit. I think they're going to get me. They almost hit my target, and then they were... All right, let's go ahead and take it. Oh, you're kidding me. Oh, Apex just failed to exit. What the hell? I hate this. Okay. There we go. Okay, jeez. Hold on. Let me just pull it up and make sure. Okay. Sometimes when there's too many orders going through, they won't fill you the first time through, even though it's even though it goes through, it doesn't, like, price went through my target, right? But I guess I could have held it. But the server or whatever you call it, like, doesn't, like, immediately process it. That's the word I'm looking for. So it does hit your target or your stop. It can happen with the stop too, but it doesn't actually get you out of the trade. And you can go to their website and click a button and like auto like flatten your accounts. But, and I always have that open, but it's annoying that you'd have to do that. And it often happens, if it's going to happen, it happens like in situations like this where it's just squeezing because so many people are like trying to get out of their trades, like they might be short and they just want to buy. So it's often a sign that if it's squeezing that you actually don't want to, I mean, if you're long like I was, it was an indication that I probably don't want to get out because like if the sellers are struggling to get out, right, to the point where like the servers are overwhelmed, if you're long like that, like there's no reason to get out. But like I said, I hit my target and yeah, so I exited. But you can see that we really didn't have even a single bear bar on the 24 tick, so I could have just held, and I tried. I did my best to move my target as fast as I could, but this price action is so quick that if you use brackets like I do, like it's totally possible that it just runs up and takes it. So even though I moved it from 30 points to 40 something, it still just boom took it. So, and that, that's how it goes. But it, like I said, something I've learned about trading on the Rhythmic, the Apex accounts with the Rhythmic data is if they fail to process your order and you're taking profits, you probably shouldn't be taking profits because it means that the whoever's not taking profits, whoever's trying to exit like because of their stop getting hit, they're also probably not getting their orders processed. So it's just going to keep squeezing. Now, the real danger of trading in a day like this is that means you could put your stop like 20 points below you, but if it doesn't process and then like the market keeps going like this, you could actually take an 80-point stop and like blow your account if you traded with a high contract count, like a lot of leverage. You could literally, even though you got a stop placed, you could still blow up your account. It's not a guarantee that you will get, like you can get major slippage. Now in this case, that slippage actually benefited me, but I've been in plenty of situations where it doesn't, and that's why I don't trade with real money during the actual conference, because, and certainly not during, you don't want to be in a trade when like the market opens or the earnings comes out or whatever. Like if you're not trading a process and you're just gambling, like sure, that sounds like fun, but if you can actually make money on a regular basis, like semi-regular, like somewhat consistently, like when you don't have those crazy illiquidity moves, like why even participate, right? Like when it does. But I am fine doing it with the Apex accounts, the evaluations, because even if I did blow those, I can buy another one for like $60. So it's they're always on sale, and if you need a eval what's it called? Coupon code. It's in the description. But yeah, it's you really shouldn't be trading right now, right? Not with leveraged futures, but it's a good demonstration. But I think it's interesting for sure to see that the setup still worked. Now, the other reason maybe we shouldn't take that first trade here is because we saw them have a sign that it was bearish, right? They recovered these big sellers and they still lifted it. So that was a good enough reason probably when this one didn't go lower. Because remember, I was looking, the whole point of that sell was after they went down, I missed this. That's really where you want to get short on the star. And or is that where I got it? Maybe that is. No. I missed that. And then I said, well, if they come back here, we can sell it. So I took it on the retrace, if I remember correctly, here. And I think it was here. Am I one off? I'll have to double check. But once we put in that big volume down and they don't continue, they immediately rip it up with triangle up. And they had a low, they've made a higher low. Sorry, ADD makes me kind of mix things up. But they put in a higher low here and you have a lot of volume. So that is a sign that we're probably not bearish. And so then the key is, well, when do you enter bullish? And so what I said, again, is we had the inverse. We had a big buyer at resistance, which you don't really want to be a buyer with big size at resistance. But they tried to take advantage of it with a aggressive seller, the star, followed by triangle, which if it's bearish should usually drop you. But in this case, they could only make that a purple bar. So they didn't have enough aggression and follow through to push the market. Well, what really happened is buyers just pulled their orders. So the market dropped, but not because of aggressive sellers. It was because of the lack of buyers. So that alone isn't bullish. But when it was countered by a big buyer, an aggressive buyer, that becomes a long, which is what I took. And then, like I said, I was targeting 30 points. I moved my target to 40 points and they ripped right through it before I was able to try to like trail it. I could have like not used brackets, but that's anxiety provoking for me for like, even though technically this in this illiquidity environment, your brackets aren't necessarily going to even work as we saw. So like including the stop, but yeah, even just like hitting cancel flatten on the order on the DOM is not necessarily going to work. That's what's frustrating. Like the less liquidity you have, the higher the chance that those orders are going to get, like they're going to fail to process, which is, it can be very frustrating because it can lead to blown accounts. But I think I've made that point. So what happened at the high? We returned to yesterday's VPOC, the POC of yesterday. We tried to get above it, but look how we couldn't get the yellow line above it at all, and especially not on a bull bar. They tried to shift it up and then dropped it. Now, if you look at that red bar, it's purple on the inside, right? So buyers were pulling their orders, and we got another purple bar, so 2 in a row, followed by the big volume bearish bar. And so that alone is pretty bearish. You would want to be out of your long here. Once you saw that, any retrace, you'd want to get out. Another pretty reliable setup that I talked about is if you have a big illiquid move like that and you get the diamond, that's actually a diamond. It's hard to see because I'm kind of zoomed out, but that you get that red diamond at the high, that or the triangle that's, if a triangle follows it, is actually a pretty good entry. That's the best spot for those speed traps to show up. If you miss it, you can actually mark that zone and get a triangle or a star out of it as well. I just was explaining something. Otherwise, I would have actually taken that trade because that's pretty consistent. So we do reject. Now, something I meant to talk about yesterday, but I ran out of time. A member in the room was asking me about the setup I call the last defense, which is kind of like the last chance for a reversal to like fail, right? So if the market's trying to reverse to the downside, the buyers will generally put in an aggressive defense because they know that if they lose the momentum, that the market could retrace severely. So what they tend to do is they'll put in heavy buyers like this, but it's to try to save it. Now sometimes it works. Sometimes they are able to save it, but one way to know, the hard part is like, okay, it's good to know that that's what they usually do, but like, how do you trade with that information? So one pretty reliable way is if you look at the high for the reversal to the downside, if you look at the high, and on my delta bars down here, I mark the high of that delta, meaning like how different were the I guess I don't know if it's the close or the high actually, but let's say close for now. It's what's the difference between how many contracts were done, or how many, I don't know if it's contracts or orders. I think it's contracts are done on an uptick or a up move versus down ticks. So in this case, the bar closed bullish, and we had a very high delta, meaning that almost all of the orders in this block, this Renko brick, were done. Most of the volume was done on upticks, on up moves, not on down ticks. So even though they have a big wick here, the move up was significantly more aggressive. Because remember, the Renko bar just shows where range was, and it closes once the market moves a certain amount. So you don't have a clear picture from just the Renko chart what actually happened inside that bar. So the delta can tell us that on this bar, we had a lot of aggressive buyers, even though it's just green, meaning that like they're trying to lift it. So they attempted to pull it down, and then they attempted to lift it. And what happens next usually is what gives you the signal after that last effort. So that's at the high, or the highest bull bar is, I believe, how this should work. So if I mark the delta for that highest bull bar, the one that got the highest, first of all, if it's really high compared to like all the rest of them, like it's like the highest one, you can get a relatively immediate drop like this. It's not necessarily going to retrace the whole way, but the very next sell signal with aggression like this, or this, like I pointed out before, the next valid sell setup often works if the last, so like here too, the bar with, and this one too, the bar at the end of the rotation was very high delta, meaning most of the aggression is at the high. It might not be where most of the volume is, but it's where most of the aggression was. Like relative to sell aggression, it was a lot of aggressive buyers going on in there. If you beat that, it's going to act as resistance most of the time. So here, if we get triangle down, it's probably bearish because we had a big delta bar here. But what I was going to show with the one on the high, this one, is if you put a line on the delta bar, close or high, I'm not sure, but they're usually pretty close, of the highest price bar, the bar that went the highest, the bullish bar that went the highest. While they're defending the value area low of yesterday. Interesting. At least trying. Kind of, I sort of don't trust this defense at all. But if you put a line there, and as you drop, as sellers come into the market, if buyers need to put more delta in just to save the move, then they put in up here. So for instance, if this delta gets higher than 206, I think it did. Did it? No, 199. So close. So if that would have just gone a little higher, then that level becomes like extremely important for the buyers to hold. And you can basically buy on pullbacks and put your stop just a couple, like one bar below that. Like I'd probably put my stop like right here if we came back in there. And you can take a very low risk continuation trade or wait for that level to get taken and then short it, because the likelihood is that high is going to hold. The hard part is you don't know if it's just going to drop or if it's going to come back up and then drop. So it's a little bit hard. You have to be able to kind of read the market and see like where to put your stop. You need to put your stop above resistance if you're shorting, no matter what. So you can't just say like, okay, they got under this important bar, let's sell with like a constant 20-point stop. Like that's sometimes going to work, but if there's resistance 30 points higher, like there is here, right? If they just drop this and get under this right now, technically your stop would have to go up here, which is way too far away for futures. So what I would have to do is if they get under this and then they do that, I can sell this move because now resistance is there. So I hope that makes sense. And sometimes that means you're just going to miss the move, even though you know it was kind of had a pretty good idea it was coming. But the problem is if you wait for the drop, like that might happen right now, and you put your stop right above the bar that breaks below this support, especially if it has a lot of volume, it's very normal for it to come back up here. They might do it right here. So watch, I would like to be a seller here, right? But I can't because I'd have to put my stop up here. Now they might just drop it, but most of the time they're going to come back up and test this. And that is very frustrating when you get in here, put your stop here, and they come back, take your stop, and then drop. So instead, when you have resistance so far away, you have to wait for them to do this retrace and actually fail to continue. Then you can probably put your stop here. You're still sometimes going to get, I mean, it's not always going to work, but it's less likely to get swept if you wait for that retrace. But watch, see how this level becomes a magnet. These dotted lines is where VPOC was previously. And you can see how that becomes a magnet. And it's still right there. So price is likely to get there. Oh, this might actually set up. That's exactly what we wanted. We need triangle down. Ugh, I'm right into this guy. I didn't see this trap star. I don't want to take this trade. The star here down at the low, it might still work, got trapped. So there's trapped sellers here, and they're going to act as support. I missed that. This is going to get choppy. That's too bad. Not worth it. Not when I'm up 40 points or whatever. Not worth it. But most likely it's going to get choppy in here. Like I said, I just didn't pay enough attention because I was explaining something else. But whenever they put an X or a star or a bar with both at the lows to the downside, or an X or a star at the highs if it's to the upside, so like the inverse. So this star showing up here, it's basically aggressive traders. And when if price returns to them, they're likely to flip sides because they aggressively shorted at the lows and then got off sides, and now they've come back. So, but the problem is I can't really see. Normally I'd want to buy that trap, but I knew it was bearish and I wasn't sure where they were gonna turn it. So what's probably better is waiting to see if this holds on a pullback. So if this lifted, it actually has a better chance of breaking out than this first trap. But one way or another, we still have trap buyers up here, so the buy direction is going to be way harder. You're going to have a much easier time trading to the short side now. But this guy can act as support, so we can get under him like this, and then they lift. Not always, but it can. And because it's possible, I just prefer to wait. See how, like, this might just go zoop. And technically, that would be an apex trap if that happens. So if this closes back here, if it closes bullish now, it's an apex trap to the upside, and that's technically a long if you're bullish. But big picture, are we bullish here? I mean, maybe. We've got a big buyer here that they could be defending. Star down in the big time frame. If we trap him, it definitely is bullish. There's the star. I mean, you could do it. It's counter trend. You've got resistance here, but the bigger time frame was bullish, so you could try it. It's aggressive, but it probably works. And what I'd do is I'd take some profit right here at the dotted line. I'm not going to take it because it's a little bit too aggressive for me, just because I prefer to trade with the trend. But this is a sign that the sellers are actually not as strong as they look, probably because they're trapped on the higher time frame during that big rip. So if you were looking for a spot for a dip buy, it's a pretty good spot. Will it always work? No, nothing will always work. But this is definitely a counter trend trade, but I think it hits that dotted line more often than not. Just like that. So I would probably take, as soon as I saw some resistance here, I would probably take some off. If I got in here with a stop here, I'd want 1-to-1, and I'd be out of half the trade here, and then just leave a runner, and who knows? Worst case scenario, you get stopped out and you have a break-even trade. But the times that this rips to a new high, which totally happens, pays for all the times when it doesn't. But this dotted line here is resistance, and that is the primary reason I didn't take the trade, because it's very hard to break through this on the first try. Technically, I guess we did break through that level earlier. Maybe that is enough, I wonder. Maybe I'm wrong about that. But my first read was that it gets to the dotted line and then reverses. But it is totally a valid trade. Plus, we're sitting right, like the location's always something to think about. We got beyond that value area. Let me just stretch this out. And then they appear to be rejecting it. So the assumption should be, if they do fall back in here, they're like right on the line. If they do fall back in here, it's probably coming to here. But if we can hold above it, it can lift. But it's like right at the level. So again, you could do it, but you're kind of paying for information that if you just wait, you'd probably have a better win rate, but you won't get as good of a risk reward. So it's probably like a 50% chance rather than like what I want, which is like 65 to 70, simply because it looked bearish and we had multiple lower highs and volume up above us, which is just, it's just going to take some aggression to move through that. They might get it, but by the time I see it, I'm not going to have good risk reward to enter, so I can't just wait for it, unfortunately. You're never going to be sure. But the way I always think about it is on a scale from like 1 to 5, with 5 being like your highest confidence and 1 being very little confidence, like you want a sense based on location and how the market's moving or whatnot, momentum, right? You want a sense of where your confidence level is, because the last thing you want to do is, in my opinion, is like have a couple good trades in your favor that worked maybe better than you thought they would, and then take a low odds trade that like a lot of times you don't even have really a lot of confidence that it's going to go anywhere, because then even when it does go somewhere, you're probably not going to manage it right. At least that's what I've experienced, is like if I'm up on the day, you know, and I get myself into a trade that like I'm not super confident about, the chances I trade that I manage that trade like perfectly are nearly zero. Like, it's just so hard to properly manage a trade in general. And if you're not confident that it's going to work very well, you're really likely to mess it up. That's been my experience. Maybe I'm unique in that way, but yeah. I mean, if you could train a robot to just take the trade and accept the results, maybe it's okay. But my biggest issue with taking a trade that I don't have a ton of confidence in is actually that the expected value of taking that trade 100 times or whatever is way less than what a back test would show me. I mean, obviously, past performance is not indicative of future results and all that, which is totally true, right? But really, the back test is assuming that you actually hold the trade when it works. And if I don't have a lot of confidence that it's going to get more than 10 points, how many times do I take half here, and then as it's pulling back, I get out at break even though I'm not supposed to, and then it runs 40. Like, I do it. Not because I'm supposed to, because emotionally I just decide once I'm in the trade that I don't want the risk anymore, right? It just doesn't feel right, or whatever you want to say. It's not on process, but if I'm going to make those mistakes, it's probably going to be on days that on the trades that I didn't have a lot of confidence about. So with practice, you can definitely get better at that. The more I practice any given entry, the better I manage it. But I also have a pretty good sense of like what I'm not good at. And one thing I'm definitely not good at is managing trades that I don't think will work. Even though some of the very best results are from trades that really don't look like they have much of a chance, and then they work, and everybody's wrong, right? Okay, so the short... Oh, I forgot to look for the short. Jeez. We had the... Did I miss it? I totally forgot all about it. We were getting distracted by the long. So that was the trap back in. Momentum to the downside. Ah, I missed it. Speed trap. Retrace. That's your entry. Whoops. Or here. Arrow down. Triangle, star up or triangle up. Followed by arrow down, then triangle down. As long as you're going with the trend is very good. Damn, I totally missed it. That I would have had strong confidence with. I was just not even thinking about it. Just thinking, I was literally thinking like, wow, I'm so glad I'm not long. Like, hello. Now, normally I'd be looking at the 15 tick for more entries, but this, when it's this fast, it's like pretty tough. You won't be, you'll miss stuff exactly like that, and then that causes me frustration, which can lead to tilt. So if I know I can't process it, I don't even look at it. I might review it later so that I can like practice identifying patterns like this. But there's no reason to have more. I've got plenty of information on the screen to make decisions. That's what I'm saying. I don't need more. If this closes bearish, you could so this is a breakdown. You could take that underneath yesterday's low. It's risky, but when it works well. It's just typical trend trading. And I would take profits at like right here and then hold a runner as long as I could. I just, like I said, not those breakdown or breakout trades are good maybe 30% of the time, but when they pay, they can give you like 3-to-1 or more. So even though I can identify it, I mean, I guess I could have taken it small. But this is why you want to take profit. See the big seller here? You don't want to see him get buried. If he gets stuffed and we get above him, and look at the location. We're, oops, wrong one. Come back here. We're right at that value area low. So it makes sense to get a response. Doesn't mean we're going to bounce. It's just they're gonna try. So if this guy closes bullish, they'll have probably gotten a VPOC above him. But if it closes bearish, then no. So to close bearish, it's got to get all the way down here. And you can see it's potentially divergent if it closes bullish. Nope. Bearish. Potential apex trap here. They could try to trap him one more time, the seller. So this guy's vulnerable because he's so low. He really belongs up here, but he put a lot of volume in at the low. So they're going to attempt to trap him. And they tried once and failed. Oh, triangle down, arrow. Triangle up would be a relatively reliable entry. I don't like that we have a resistance right here, though. It'll probably get here if it closes triangle up. I don't know if it goes any higher. There's purple bars above us. I don't like it. And it's definitely counter-trend. Oh, good. It didn't even happen. That's probably a short. Oh, triangle down, arrow. Do they get triangle up? That's unusual. The momentum is slowed to the downside. This should have broken down again. This actually looks like a better opportunity to go higher. I think sellers are pausing here. This should have broken down. Doesn't mean it has to lift, but better opportunity here. And your risk reward's a little better, but you need a triangle up here. I hate that we've got this previous VPOC above us. That's a problem. But that's probably a good entry. It could definitely squeeze here. Boom. I didn't take it. But it makes sense. Because they tried to stuff this guy, and the bulls showed up again. That was probably the better entry compared to the other ones. It's got higher win rate than the breakdown, even though the breakdown worked really nicely. This one's going to work more often, and it's definitely higher odds than the one where we were coming up into that dotted line. And see how the dotted line here, like we've actually closed above it, and more importantly, it came from way up here, so that's your target, is the breakdown point. So I'd want to hold this as long as I could, but I'm definitely taking profits up around like 87. I probably should have took that. I just kind of... I guess I just got enough money for the day, because that's exactly what I'm looking for, and I just didn't even try to take it. The problem is it's the end of the day, and it's super frustrating to be up whatever I am today, 1,200 or something, and give it back. 2,600. Yeah, I should probably be done. No wonder I didn't take it. Now, it doesn't have to hit my target, right? And that would suck. But you're going for a reversal. Oh, we can look for the last defense again. So the last bearish bar was this one, right? So mark the low of the delta, or at least the close. And if they get a bear bar with bigger delta than that, and then we get over it with VPOC on a bullish bar that's not pink, it could lift. Squeeze, actually. I don't know if we'll get that chance, but usually what happens is you get the big bearish delta on a move down like this at a higher price. And if it comes in at a lower low, yeah, don't fight it. Oh, look how close that was. It didn't quite do it. Yeah, not quite. Not enough. Very close. So beating this one is not necessarily going to cause a squeeze. It doesn't have enough negative delta. Oh, sorry, it's this plus sign. So they could still defend even if it comes up here. Whereas if it had more delta than they had at the low, it's close, but they don't quite have more. It's not necessarily the point of no return. Although this definitely does look like a last defense that'll probably fail. But we did not take out the low of the day. So if that holds, it's definitely bullish. But I kind of doubt that we get this close to it and not go get it. Because there's obviously liquidity back there. It's just kind of hard to believe that they would defend it without testing it. They got really close to it. Look, that's the low. Like, they could definitely lift it here, but I guess it doesn't have to be taken today. Let's put it that way. But more than likely, when it's this close, I don't want to like buy calls and plan on holding them for 3 days, because chances are this low gets taken out either today or overnight, maybe tomorrow morning. It's pretty tough to hold this when no one has any idea if there's buyers waiting down here. What's way easier is come down there, test below it, find no sellers, and then lift. Way easier. Doesn't mean it will happen. But if you want to guess where buyers will show up, it'll be under the low. So this delta was clearly bigger than the low, delta at the low. So that level we can mark. If we can get a VPOC on a bullish bar that's not pink, that gets above this, it's almost certainly going higher for the time being. It doesn't mean that this is the low, but the rotation is heading up. If we can get above 15.560, 650. If we can't, it suggests that there's actually like more sellers than buyers. And this X actually suggests that as well. They're going to have to beat this immediately because they got star triangle down and that star had an X on it. So if you can't beat that, it's usually bearish. I guess that's the same thing because that's the same bar. Now, unfortunately, if we just get a pink bar up there, it's not enough to be certain or confident, I should say. It's getting choppy because this used to be a VPOC from previous day. Maybe, I forget what day. A couple days ago. So it's going to get choppy in there because a lot of volume is done there. And whenever you enter an area that had a lot of volume, you're going to get a lot of trading. I mean, both directions. Okay, double pink followed by a white bar would be bullish. Double pink, but a third pink is not good enough. Go. It's got to get above the high on a non-pink bar with the VPOC, the yellow line. Yeah. 3 in a row is like, what are you guys doing? Sellers are just giving up and we need a follow through bar. A star up would be awesome. See, as soon as sellers come into the market, if buyers give up now, like it's just chopping. Yeah. So sellers gave up, and now buyers give up probably. Well, maybe not. They're fighting over it. Not purple. They're not taking it. This might actually go higher. They have to get VPOC above that. Probably not going to happen this bar, but the next bar maybe. What I'd like to see, honestly, is a bear bar and then a reversal. That would make me much more confident with the long. Sorry about the jet. I don't think that one's going to come over my house. It's far away. As it turns around. Oh, here it comes. Okay, so they got to turn this. Buyers have to turn this pretty much. I guess they could get under this technically. But you'd want to see them lifting now. Yeah. Sellers gave up. Buyers give up. This area is done. We're leaving the area. Last chance, basically. Otherwise, this low's out, and this low's probably out. So they're going to try to apex trap. They need to close it here to get it. But now they have resistance, so it's probably not going to work. It's most likely bearish here. If that wasn't obviously obvious. Already obvious, I mean. So here's the potential apex trap. right? Test below, closes above. In 1 bar. Must be in 1 bar. They got to close back inside this volume. And the fact that this one had buy flow would make that apex trap better. Oh, they didn't do it. It's bearish. They took out that low. They're coming for this low for sure. Now it's just a matter of how do you get in with good risk reward. They probably won't break this. So like it makes sense to sell this and put your stop right here. It's not going to work very often, but when it does, you could get a big flush because this usually doesn't break. Oh, it did. Okay. Interesting. Right back up again. There's really not a lot of interest down here. Maybe it is done going down. Weird. So the dot getting beaten by a white bar is actually a sign this might be done. Wow, they did it. Okay, so now if they defend this low, it's bullish. And if they get up above this, it's bullish. Oh, they got above this and it has lots of delta. But that's the new low. Never mind. This is no longer valid for a rip because now they made a new low. So now they need a delta that's bigger than this. So it's going to pull back most likely. And then this low holding would be bullish. If they just squeeze it out of here, that sucks, but it could happen. It definitely looked like it was going to clearly drop to the low, and it just didn't do it. So that's often enough for a 40-point rip. It's probably not decisive long term, but you can get the trade. It's just an apex trap. It's classic trade and perform. Exactly like Simon teaches too. And like I said, having the bull flows here, getting under it and finding buyers makes that even better. So I was looking for it on this bar, but they did actually still do it because they got back into above the low, back into the range of this bar within 1 bar. I was expecting it to be here and just kind of forgot about it. But that is actually a entry. And then once you get above these yellow dots with VPOC on a bar that's not pink, it's likely bullish. You just have to hold this low. Or defend it, I should say. Sometimes they just go. He probably just got done talking, and that's why they lifted it. I didn't even think about that. That's probably what it is. Okay, so we get to yesterday's low. This is probably the most likely place to find a seller. But now, our seller's trapped. We have star trapped. He actually got released and then trapped again. And then this one's trapped. As of right here. So if this star holds, if that holds, or if this holds, potential buys then. Otherwise, we're just expecting the low to get taken out and that this was just a response to Powell being done. Look at how exacting that is, though. That's not reliable. That's retail. Institutions don't sell because we returned to yesterday's low. It's double purple, bear. That's bearish. I'd love a retrace to short, but that's bearish. Everyone's got their eye on the low. But if either of these green lines hold or are defended, it can actually lift. Because we had trapped sellers there. So if they remain trapped, they'll be buyers here. So we want to see them buy it right here. No arrows down. Yeah. And then this one, this guy got taken out and then released. So he too could be support. But that's so close to the low, I'm thinking this one has to work. And look how they didn't actually test it. So that's not I'm not very confident about this lifting because they should have at least tested this, if not below, and then found buyers below it. The fact that they're showing up still at this VPOC, that green area, tells me that this is still like old order flow. Probably sellers like who were trapped for a minute, who are like, okay, I'm going to get out at break even. I don't trust this, is probably what it is. You never know, though. It could just lift. I would think if we get a pullback into here, it could probably be a good sell. Okay, the green bar, if it's followed by a bar that does not have a wick, usually gets an immediate lift. And if it goes bearish, it usually gets an immediate drop. So what this next bar does will tell us how much momentum there is. But like an X down would be a sell. And if they can't get back to the VPOC and they just lift it, it'll probably take this. And then probably roll over. So they still have not gotten to the yellow dash, the VPOC. They're bouncing off the middle of the Keltner channel. Interesting. Yeah, I'd love to come back up here and then get star down. And then just attack the low. That'd be awesome. But what are the chances that's going to happen? Probably not good. We'll see. Like I said, being up 2,400 or whatever I was, I'm not going to take a trade in the last half hour. That's nuts. Okay, so X down would be bearish if we get the X or star. Well, they got to close it though. Nothing until it closes. They did touch the VPOC of the green bar, so if it goes up, it could just chop. But see how like this green bar, they put the VPOC at the low, and then the next bar lifted without touching it? Usually you get a lift. This definitely tested it, so it's not decisive. Because the green bar is saying that there's like aggressive sellers on a smaller time frame in the wick. So if we can't get back to them and they just leave, that smaller time frame is going to squeeze. It doesn't mean this time frame is going to squeeze. Sometimes it does that. But you'll usually get at least a bar or two. And then the red ones are the inverse of that. Okay, so it came back up. This is what I want. But now it's got to give a bearish triangle down or star down. We might get it. That'll be orange. And then triangle down would do it. So they tried to lift. They pushed VPOC lower. You get the box here, meaning that like there was little resistance. In this case, support. Oh, if they beat that, it's just going to lift. You needed a triangle. You need that triangle to print to be bearish. Oh. Will they do it? This should not be that strong of a support. They should just drop here. Unless they're going to come up here and steal these stops and then roll. That'd be funny. I hadn't thought of that. Because it's literally like right at yesterday's low. So they'll come up, take all the retail stops, and then roll it. Watch. That actually makes sense. Bastards. Okay, they're not going to get the triangle, it looks like. Unless they just, yeah, so... So a VPOC shift, buyers are trying to use this as new support. I don't believe them, but we'll see. Because look, they got a much higher low, and then they tried to lift, and sellers showed up, but now they're trying to make this another higher low. I don't believe it. They're probably going to take this liquidity, but I bet you anything it rolls over. That is not sustainable. Usually when you get orange followed by green, you get one capitulation move, and then it rolls all the way back. Either the inverse as well. Green followed by orange. I'm sure we could find one if we looked. Now, the higher time frame is still technically bearish. We have not gotten above a yellow dot. We do have some trap sellers, though. It might just chop in here. I really thought this low was done. If they can get under this guy, probably will be. Oh, there's a star down. I'm not going to do it, but that might be it. You'd really think they were coming up here, though. Why not? There's liquidity just sitting there, but a triangle down here is technically a short. Have they gotten... No big deltas to the downside. So sellers haven't really been working that hard yet to defend that low. But the low had huge delta, and that's why you got such a rip. Is that everybody in this bar was selling aggressively, and then they trapped him. And as much as I find it hard to believe that they're going to put the low here in the afternoon when the low of the day is so close, like, it doesn't really make sense. But I've seen it happen before. And then overnight or the next morning, they'll just sweep it. So just because something's unlikely doesn't mean it's not going to happen. What they'll probably do is that we're just chop here for half an hour. So if you were bearish, and this closes with a triangle, assuming that triangle stays there, you could enter. But your risk reward is pretty weak. But if you can get through this, your risk reward's great. So I'm not going to do it, but for continuation, it does work. It just got choppy here, so it's not usually a good idea to trend trade. You're better off waiting for the apex drop, getting above it, and then getting a rollover. But sometimes you don't get that opportunity. In that case, that's the only chance. I just think this is weird. So I bet they rip. But I don't know. How much time is there? Yeah, still another half hour. I don't know. Maybe they will rip out of here. Yeah, that doesn't surprise me at all. Star down, star up, triangle up would lift you. Yep, so momentum shift. And they tried it here and failed, and they tried it again. So the bears are just, like, apparently out for lunch. Like, they always fumble. It's so funny. So this is definitely going to take this high. I shouldn't say definitely, but there's a good chance that that swing high gets taken here. So, like, really the lower you can get in here, the better. But your stop does have to go here, which sucks because there's actually support here. So you never know. It could just, like, be an expanding chop zone, in which case this high might not get taken. But usually that's a momentum shift. If I was only up $400 or something, I'd take it. It's definitely valid for me. I just am not going to risk giving back in the last 30 minutes. I'd be pissed. Especially if it does something like this and gets stuck, like, ugh. But yeah, you need it. I'd basically target 90 and then leave a runner. Because it literally could just, like, give it all back. Like, it is. The opportunity's there. And I'm not against it. I'm just beyond my target for the day. So, yeah, there we go. Go. Not quite. Go get it. Yeah, that's silly. So, again, star or triangle down, followed by triangle up. Usually pretty good, as long as you're above some flows. And we had flows back here, so we're above them. It's almost always the right move. The only problem is if you're trading right into resistance, you might just hit that resistance reverse. So you got to make sure you have risk reward. But in this case, this resistance was put in because of a previous day's low, that retest, and I just never trust those exact levels. Like you're usually gonna retail traders put their stops behind yesterday's high or low, or yesterday's value area high or low, or whatever, and like visual or something you'd find on a footprint. So usually those aren't like the high or the low again. Like they might be for one day, but you're usually not gonna hit them exactly, and then that's the swing high. But it can happen. It's just not usually what happens. Like with liquidity sitting right up here, you never want to short this. You got to wait until they take the liquidity, and then it can go down. So I'd probably, if I saw any sign of them reversing, I'd get out. Otherwise, 90. Let's see if it gets 90. Yep. So I'd be out here. And then leave a runner, but I'd be paid. And I mean, it's a good trade. Like that's 1-to-1. So could have added another $400, but that's okay with 2 contracts. But like I said, I am at risk of getting very, very frustrated with myself if I give back on a day when I actually traded relatively well. But if I had struggled to find trades all day, I would totally take that, as well as the one this. Actually, I really should have taken this anyway. This apex trap was perfect. Arrow, test underneath, come back up. And it even had the diamond, meaning all the volume was at the low and all the delta was at the low. It's perfect. So I literally just wasn't even thinking about trading anymore. Like I had already like checked out emotionally, mentally, I mean, from like pushing buttons. Because I kind of feel like I got a little lucky with the big squeeze, and like, yeah. So that's, I know some people say that like they think you run hot or whatever, but like I'm not. I'm a horrible gambler. I'm a much better trader than gambler. I don't believe in any of that shit. Like if I'm trading on process, I will keep trading until I've hit my goal. But I know myself. Here comes the roll. Look at that big volume. Big flows. And was it divergent volume? I can't tell if it's divergent. See, this is where the previous high got put in. Oh, no, I don't think it's divergent. Darn. Because less volume, but bigger flows. Oh, it's so close. Yeah, less volume, but bigger sell flows would be a sign of weakness in the market, but it's very close. It's probably going lower. Like I said, they give that back all the time. This makes perfect sense. And now most likely the low gets taken out. This is probably going to close near low day. Fun. Had I taken this trade and gotten my first one off at 90, I would likely exit when we gave that back. Even though that's not always right, that's usually what I would do. And again, that's another one of those situations where it's like, would I even handle that correctly? Like, would I leave my stop down here? Would I be willing to give back my winnings? Like, the chances that I make a mistake there are really high. The later it gets in the day, especially if I'm either losing a lot or winning a lot or making a lot. All right, let me run to the restroom real quick and grab a new drink, and we'll watch the close, and then I might just go ahead and do a review. I'll be right back. Hold on, let me make sure I can get this. I'll leave the screen on so you guys can watch. Okay, be right back. No? Oh, there we go. Sorry, I could not get my microphone to turn back on. All right. Ha, look at this. So see what I'm saying? I would have totally mishandled this. So we got the buy signal here. I knew this liquidity was going to get taken. Our stop on that entry would have had to go underneath the star bar, right? And I said I would have taken profits around 90, but then they put in sell flows, and I was prepared just because of the way the markets like looked to me. Like this was so close to the low that there was a chance that it would drop, but buyers always fumble, right? Like all the time. And there were definitely signs that if they were going to take that low, it should have happened here. I thought this looked super unsustainable. I was convinced that it just wasn't ready yet. But then what they did was they did take this liquidity. The sellers tried to reverse it, but the VPOC, the dotted line, the VPOC over time, you can see that this is clearly a level that people had a lot of interest in. That was defended. They got another star, another triangle up, and it just squeezed. So this guy here got stuck. So what if we were trying to get involved? What we really want would be a dip. It's late now. It's not going to happen. Not on Fed day. It's just going to rip. But that would be ideal. Is a buy in that zone. You definitely don't want to be short when you see something like what looks like a layup for bears, and then they miss it because you get this scallop squeeze. And then I mentioned that the low down here had a lot of volume, a lot of delta. See how bigger? Oh, did I miss this? Man, I missed it. I totally messed that up. So this was the swing low, right? Not the low of the day, but the swing low previous to the squeeze. If you mark how deep that negative delta was, so this big sell bar here, the big flows bar, had more delta slightly to the more negative delta than the low. Yet price is higher. And the way it's supposed to work is like if it's momentum that's building as you drop, you get more and more delta as like more and more buyers give up and more sellers are like have more confidence selling on the bid rather than getting filled on the ask. But in this case, the market actually lifted up and then they just sat on it, right? They just crushed the bid here. Even more sellers were aggressive here compared to at the low, which isn't bullish, but if you get above him, if you then see this, that is the last chance or the last defense. It's the last chance for sellers to really take this momentum back. Now look, his high is right here. It's basically right next to the overnight low, which is like probably why he defended, but they didn't wait for them to take the overnight low back, which was probably not great. Like from the seller's point of view, they probably should have made sure that there were sellers up there. More than likely, someone just hit it and was just anxious to take back this yesterday's low, and they got a purple bar to take out these two pink bars, which could have been really bearish, and they even got follow through. So this guy is where I said, man, if I was long, I guess I'm out because it looks like they're going to take it back. But what I didn't notice is that they put a dot and the dotted line. So this is a volume shift, and then the dotted line is where VPOC was over time. That was actually below this. See, so they pushed so far, even though it was mostly just sellers giving up, that by the time they got the triangle and the next bar, they still hadn't taken out the swing. And when they did get to it, they found buyers who aggressively pushed back. That's why it has a star. And then you got pink triangle up and another pink bar, which is possibly just sellers giving up as it comes closer and closer to their stop. But then they take out this big delta bar with a non-pink bar. See that? Putting VPOC above his high. I know the arrow goes up there, but it's where the little flag tip is the high. So here, let me make it bigger. So that VPOC, the yellow line and dash in the, as long as that bar is white and not pink, that is confirmation, as best as I can get, order flow wise, that there are, of all the buyers in this bar, the one with the most contracts was actually above where this huge negative delta was. And if you've got more buyers than anywhere else in this bar coming up above the resistance, and there's actually some sellers in this bar, it's not pink, it's not just sellers giving up, there's actually like confrontation here, but it closed bullish, lifting most of the volume above that. It's as close as you can get, for, in my opinion, to confirmation that down momentum is gone. And so once you get this, it's very hard to buy it because you're so far away from support. So, but you certainly don't want to be looking short once you see that. I prefer when the big delta, where I want it is like here on the next rotation, right? Or if the problem here really was this huge rip, that's very hard to recover for the sellers. But if like this bar has big delta, bigger than the low, and then you get over it and get a dip back into it, you can buy it there. But that one didn't have enough delta. All the big delta came up here. So now they're going to dip. So maybe we will. Oh, it's too late now. But let's just see if this plays out. I don't usually do it this far away. I wouldn't really look for it that far away. That's why I was gone. But I didn't see this, and I was watching, but I didn't notice it. Because it was so far away from the low that I had already I had a bias that like we were just collecting liquidity and reversing. Like I wasn't even thinking. I thought the fact that we didn't get that big delta down here probably meant that it was coming back, but they just kind of delayed it, which I don't know. I haven't really looked for it there. So let's see. So they, first of all, buyers need to defend this right here where all the volume was and where that ended. This, you can get under it, but look how they put big volume. The diamond is like huge volume. They're pushing really hard trying to free this trapped seller, and buyers are going to need to show up here to save that level. So purple's okay, but if they get a real bar, like a non-purple bar, brown or whatever that color is, yeah, then it could totally drop. But if they save this right here, it could go and make a new swing high. So let's see. A purple bar here would be fine because that just means illiquidity. But a real bear bar, especially if the VPOC was near the low, would be problematic for buyers, just in the same way as this was problematic for sellers. But note, to get a buy bar to print, they got to get all the way up here. So, yeah, it looks like they're fighting back, so this will probably not be a purple bar. They might actually take this back, you guys. This might be closing at the low after all. Look, they've got the VPOC below. They're going to free them. It's not going to be purple. They've got plenty of buyers fighting back. There's plenty of liquidity in this bar. If they close it bearish, it's probably done. That was interesting. Wow. Are they going to do it? They're trying. Buyers have to show up here right now. Nope, they don't. So sellers free this trapped seller with the big flows, and now it's going lower. I'm almost certain. Let's see if they try to recover it on the opposite side. This one had quite a bit of delta. Let's see if they get a big delta bar coming in the other direction. Usually it's at the high or the low of like momentum, but I don't know if you can use it for like a typical swing, high and low. We'll see. Let's see. Okay, so they're coming back to this same spot. I doubt this is going to keep working as support, right? It worked multiple times before, but it's rare for it to, like, 1-2 times, that's normal, but 3-4 times, like, bouncing off the same location, it's like, that's probably not going to hold. But yeah, once I see this VPOC below the big flow, that's usually bearish. Buyers are going to have to work really hard and trap him What a fight. I'm pretty sure it's going lower. That's not what I expected. They are fighting for it, though. They get a divergent bar with aggression. They're going to need to continue, though. If this guy gets beat, the low's going to get taken out. Like I said, seller's always fumble, so you never know. Never bet on bears to follow through. Wow. Okay, well, they're fighting. We're going to find out right now. They really need to push a VPOC above this guy to be convincing that they're actually going to try again. I don't think they're going to do it because they already had the chance to lift it. They should have bounced it right here when they had the big seller. That was their chance to flip it, was trapping this guy, and they didn't do it. And then they let this guy go. That's usually a sign that it's bearish. I don't have a sell signal. I don't have a way to get involved here, but I might on the... I guess we could check the smaller time frame. Well, it's the end of the day. Sorry. Here. Oh, look at that. Big flow on the small time. There we go. That's a sell signal. All right. Let's see if it follows through. Star up, X down when it's bearish is definitely a trend following continuation signal. It's probably going to the low. I'm not going to take it. It's the end of the day. But let's just see for forward testing's sake. But this too looks pretty bearish with the big flows coming in, getting a triangle down. Oh, but you know what? And yeah, we've gotten this guy trapped, recovered, and he's acting as resistance. It should go lower. It is the end of the day, though. You never know. There's different participants now than the rest of the day, so things can act wonky at the end of the day. Usually this is relatively quick. That's a setup I call star killer, where it's star up and then the X kills it. Because this is an aggressive buyer, and someone's basically letting them come above the high and then attacking and taking that bar back, which is pretty aggressive. And then here you've got big flows coming in to the sell side underneath the big flows that we saw at the buy side. That's also pretty bearish. What's to the left here that's causing so much trouble? Still that same level. Surprised if that holds. And again, yesterday's low was contested. But we've already tested above it and gave it up again, did we not? Oh, have we not gotten VPOC below yesterday's low again? We haven't, only on a purple bar. They might be able to lift this. This would be a crazy, crazy trap if they do it. They need to do it immediately. They can't even give one bear bar here. That usually does not happen when it's bearish. You usually do not get X followed by a bullish bar. This is, if I would have shorted this, I'm giving up. I'm like, I'm going to take a tiny loss and just be like, you know what? This is not how it's supposed to work. Oh, and look, smaller time frame got big buyers. They are trying to defend this. I don't know if it's going to work. What a fight. They're back up right in. They're trying to trap him again. I have to assume if they trap him again, it's just going to squeeze like crazy. Because this looked bearish. But they could not get VPOC on a bearish bar that's not purple underneath yesterday's low. So like I said, those levels, everyone watches them. So like if there's no volume underneath it, like no one's going to commit to follow through. They had such low volume down here, and once they did get volume, they attacked it. Okay, they got a pink bar. They need something more than that if they're going to really squeeze this guy. There's no way I'd be in this trade. I'd be terrified. In either way, it's just not decisive at all. But had this just continued lower, it would have been a really nice drop. But now I mean, like I said, I don't trust the bears at all. But you can see how sellers are giving up here, which is why we're getting pink. If they fight back and then they push, it's going to go higher. We want to see, if we're bullish, we want to see a white bar here, not a pink bar. The pink bar is not bad, but it's not bearish, but it's not decisive enough. Right back up to that level again. So sellers gave up. They're holding back for, I guess, this. Weird. They could get 3 pinks in a row. Sellers just gave up. Wow. Yeah. Oh, there we go. That should confirm it. There we go. It's bullish. They trapped him again. Unbelievable. Bears had a chance. They had him out. He was out. He could have gone, and they pushed, but they lost. You could buy this, honestly. It's gonna rip. This is gonna go higher. I don't know how much higher, but definitely higher. There's no. Oh, that's the close. Wow. Is there's more earnings, huh? Maybe that was just like a little earnings push. I'm curious if they give that level up, what happens? Because that move right here should get anybody who is short down here changing their mind, getting sellers giving up and then buyers showing up. Where is... Ooh, they put a lot of volume at the high. Shoot. So it's not over yet. If sellers can do this, it could drop still. But this looked like a wicked trap. But watch this dotted line, because there was a lot of volume there. So it's kind of acting as a magnet. If they can rip through that, then sellers are covering. If they can, it's probably just kind of neutral, but yeah, look at that. Boom. Slow motion train wreck for sellers. That's wicked. Wow. I did not notice, and I should have, that if you mark where the actual... I hadn't thought of this, but if you free... I'll look for this. If you trap him, and then free him, in other words, get back below it, this guy got under it, and that's what made me think it's bearish. It was the low of yesterday. It was that key level. They could not get a bearish bar back below the low of yesterday. Even though they freed the big flow, they could not get a bear bar below the low of yesterday. And so for the time being, no one wants to be short if you can't put any volume below yesterday's low. That makes sense. I really don't know if that's going to last, because it's just like, again, it's like a retail location. It's like, it's on everyone's chart. Everyone knows where yesterday's close or where yesterday's low was. But it's interesting how they got down here. I was sure that this was going to fail when they did divergent bar with aggression and then immediately beat that. That is so often the way that trends continue. But what I'm curious about is how often do you get this followed by an up bar? And I'm wondering if that makes the triangle up a really good entry for a reversal. It's basically the X getting trapped, but it's like, usually I would wait for a non-pink bar, but I'm wondering now, do I even have to wait for a non-pink if I had a star back here? Let me see if I can find something similar, because that changes things a little bit. So here on the 15 tick, star down, we got star triangle down, which should have been pretty strong. And then we get behind his high, which is where the arrow, the point of that flag is. Did we get a VPOC above it on a white bar? Because that's usually how I think of confirmation that it's been taken. It's right at the level. So on the 15 tick, it wasn't so clear either. And then the other way to do it, big flow gets beat, by purple bars and only one bar. Something I showed in yesterday's review was if you only have either purple bars or one real bar underneath these flows, for some reason, I'm not totally sure why, but once that happens, if you can retake this VPOC with a bullish VPOC that's not pink, like you actually fight over it and buyers win, it squeezes most of the time. I don't know why, but that's how that tends to work. And then you also, on this time frame, got triangle down and then triangle up above flow to the upside. So this here, since 2 bars before it had triangle down, even though this one doesn't have the double triangle, that 3-bar pattern is really strong, particularly when this has the arrow, or if the arrow is lower. But oftentimes what I've found is if the VPOC of the arrow is higher, that can act as resistance. But I guess since we close above it on the entry bar, it becomes support. That's cool. What was that? Did I just see? Yeah, they just broke out crazy because of earnings. Look at that. Woo. Guess I should have bought calls. Okay, so we're looking for star down. Let me just make sure I understand this pattern real quick. Star down. No, star up, X down, and then immediately after that, bull bar. Star up, star down. Yeah, I know that. And it's because the purple bar gets, see, triangle down, arrow, triangle up. Boom. This was earnings, so you would never have been able to take that. But and note that the arrow down followed by triangle down, they try, but all they can put in is purple bars, and then buyers show up. This one also had big volume, and then it just gets continuation. As long as you know the direction and you're above support or at support, they can lift. But you have to be careful, because if you're too close to resistance, you won't have good risk reward. So once it's trending, that's how I do it. And then these bars with the diamonds can become support. I don't know if we'll come back, but okay, let me see if I can find this X star up, X down getting beat, or star up, X down, star down, X up. See, that's usually what happens, continuation. Star down gets immediately beat. See, this one just got pink, pink, and then this is where you know it's bullish, and it goes a little higher. It's just a scalp, because it's not at support. X, and then continuation, so that won't work. Star up, X down, yeah, usually continuation. That's how it normally works. Star down, X up, continuation, yeah, and then that becomes support. So that's how I usually see it, is that the X continues. What I'm looking for is where the X doesn't get a continuation bar. See, star up, X down. This one actually got the continuation bar, and it's still lifted. Interesting. Wonder why. It's purple. We did not get a VPOC behind the star, that's why. Didn't actually beat it with volume. Okay. I'm just picking the 15 because there's more bars. I could technically be looking on the 24 too. But I don't know how often that shows up, but I'd love to know if that's consistent. Here. Well, X gets beat, and then they just dump. But there's no star down here. It's a speed bar, though. So this is what usually happens, is star up, X down. Oh, see, this one has an X, and it gets beat, and then it continues lower. That's what I'm used to seeing. So it's not just beating the X, well, although this one's pink. I'm thinking you need to get at least above this. See, this one gets above it in a pink bar. And that's not enough right away. That's not enough at all. It might work the same with stars, because stars and X's are kind of similar. So, yeah, so like star one way, star the other way, and then the bar flips, you get a reversal after that. That might be the same. I'm just wondering how it works if it's like choppy, because I don't want to be taking trades in choppy markets if I can avoid it. So star to here, star X. Oh no, X gets continuation, and then once the X gets beat by a real bar, now that becomes resistance. I knew that already. Looking for star X continuation. That's how it usually works. X down, star up. Oh, this one has X2. So this X got beat by just pink, and then they pulled back to the VPOC and lifted. Ah, maybe that's the key, is if you get over it with pink, it's got a hold on the retrace. It might be that simple. Star X continue, star X beat. Here we go. So what I want to know, does this ever get beat by a bullish VPOC? I don't think it does. Nope. Pink bar, but not a VPOC. And it goes lower. So it definitely is not just a pink close. It's at least a VPOC. I just don't know if it can be a pink VPOC. Star X. Here we go. Break. Pink VPOC. Lift. Pull back. Where does it have to hold? VPOC probably just can't get under this or this. That does seem to work. It just needs a pullback most of the time. Neat. Star, oh, X, and then this is delayed. Once this gets beat by a VPOC, it does continue lower. And then he gets freed. And that becomes support. That makes sense. I knew that already too. Especially in slow markets, that works pretty well. Star X continue. And see, this VPOC is actually above, well, I guess, yeah, above the star high. So it can immediately continue. Whereas this one, you don't get a VPOC above the star, so it pulls back first. So it seems like that really does matter where all the volume is. Matters. So here you get continuation without the VPOC behind the star, and then this one does get the VPOC behind the star and it drops. So it's not always the first one. I wonder if triangles are similar. See, because triangle up, star down. Chops until they get VPOC below it. Now, that's resistance rather than support. What about the opposite? Star. Oh, I need triangle in the opposite direction. Triangle. I don't know if that'll work. Yeah, I'm not sure about that. They did come back after a purple bar got under it. If you look, came back to the VPOC right here. You'd have to be paying very close attention to notice that. But here, X beat, but not the high. Yep, resistance. Cool. What about star that's beat? None of those are immediately beat. X tries to go, can't get a bullish VPOC continuation, and then they get bearish VPOC below it on a purple bar, so we need a pullback probably to the VPOC. This one goes a lot higher than that, but then it does reverse, at least for a little while. We got a bull VPOC up there. That doesn't seem to matter. So it's maybe just the first rotation. Okay, star X, this is perfect. So pink VPOC above. Right, now you're going to need a pullback. That one does not come all the way back to the VPOC, but somewhat consistent. Although here we did get a real bar above it too, not just a pink bar. Okay. Star down, star up. And then another star. And then here, VPOC above it. That should be support. Neat. So it's stars and X's. So X, X, X. It should be exactly the same. Get purple below it. It would need a pullback. Get real bar below it. It can continue. And then the purple VPOC is your resistance. Neat. That's actually pretty cool. I wonder if that works on a higher time frame, because that could be really useful on a higher time frame. Star gets beat by purple. Star gets beat by real bar. Come back. So the star's VPOC or so. Yep. I mean, it makes sense. That's where the volume is, so it becomes a magnet. But the bias has changed, so they reverse there. Like, price can easily get there, but staying above it is hard. Star with X, star with X. None of those got immediately beat, which is a pretty good sign that it's bearish. Here, star up, X down, X up. So you really aren't bullish unless you got over that. Okay, and then the other way, star down, X up, gets beat. You really don't know you're bearish until you get a VPOC under it. But if it's a purple VPOC, you're going to need to return here. You're not just going to drop. That is very consistent. At least in this market it is. X down, star. Yeah, I knew that. Look how you can't get VPOC above the X, and so it's still bearish. And then here, you still can't get VPOC above the X, and it's still bearish. Continues to act as resistance. Pink bar above, you're going to need a pullback. Real bar above, it's probably bullish. Oh, they come back to the level again. Now it's bullish. Wow. So if it's not taken over, that level stays good until it's gotten that VPOC above. That's pretty cool. What about all the way back here? Do we ever get back there? Well, we must eventually. I don't know how long this works. Oh, we haven't gotten there yet. We're about to get there, but okay, so this is the open. All right, so let me go to the 24. I'm going to kind of quickly review the day. There really was not a lot of opportunities on the 24 tick because it was so slow. But there was a really nice short I took. Oh, here, I'll show you how I did. Hold on. I gotta snip it so I can take my account info off. Okay. I am happy with my performance. Did I do that right? Yeah. So yeah, I did pretty good today, and you can see the win rate was strong, despite trying some new things. I was cautious early. You can see my trade count is low, so that is a good thing. But overnight we had a big drop, and I caught this with puts, so I was actually short at the end of the day here. So we had, I think this is it. It was a double purple followed by a bear bar, but it was before the close. It was offsides for a minute. Here, it's here. So I believe this is it. The blue was not here because that's where the VPOC of yesterday ended up being. So whenever you got two purple or two pink bars at the beginning of a rotation, and then they're followed by a bear bar, it's a possible reversal. It doesn't have to be, but it's possible. And this one also had divergence in volume. This price went up, but volume went down. So generally, that will lead to some kind of drop. It does not mean the entire trend will reverse, though. But I had also identified, I showed this earlier, but on the candlestick chart, I knew that we've been in this consolidation range for days, and we tested above it, and we were quite a bit above it, but we hadn't come back to test the VPOC where the VPOC was at the time, which was, I showed this before, but VPOC was not that far down. It was here. I swear it wasn't there. Okay, I guess it was. I thought it was up here. Maybe that was before the breakout. So this was all consolidation. We left the area, right? And we had come. Oh no, this isn't. This was the. This is aftermarket. That's why. So we didn't have that yet. So it was more like this. Huh? It really was down there. Okay. Yeah. So if you look at the value profile, normally once you've left the area and returned to it, you're going to get a sweep through the value area, and then oftentimes you'll return to low volume nodes like this, but this time they went a little higher than that and they went to this one. But I looked here and I saw that this was very asymmetrical. You had all this volume up here, you had the value area, and then like no volume. It was just this one little move. Normally these are normally distributed, but not always. And when they're not, what tends to happen is price will come down and test this just like this and make sure there are natural buyers here before they continue out. So the fact that we were trying to leave the area without ever coming back to test this made me think we probably had at least one test more to like come down here, and this was below the value area low, so getting this sweeping move was relatively likely. I just didn't know when. So I wasn't able to take it with futures because I can only hold till the end of the day, and I knew that there was a good chance that it would need some sort of a catalyst to do it, and I didn't want to risk very much. So I took a small options trade with puts up here near the close, but I needed a sign of weakness. I guess I really didn't need a sign of weakness because I'm really using a higher time frame, but that was the thinking anyway. And I shared it with not everybody in the room because like I don't trading options and sharing those trades in the futures room can cause people to like make mistakes. You know, like if you're trading futures, you're trading intraday. So if I'm sharing like swing trade ideas and you see me saying short, but you were looking for a long, it can mess with your head. So I don't, if I see a swing trade idea, I've got some members in the room that also do the same thing as I do with like swing trading with options, day trading with futures. And so we'll share it like privately, but like I don't want to, the last thing I want to do is get in the way of someone's plan by saying I'm shorting and then them thinking that their long is wrong when it wasn't. It was clearly bullish intraday yesterday, but I wanted to see some sign of aggression to the sell side, thinking that maybe I caught the top. But of course, I knew there was a relatively good chance that I didn't. But I didn't necessarily need to put my stop where I normally do for futures because I'm not risking very much by only taking a couple of contracts with options. So I'm short dated. So when I see two purple bars and they're followed by a bear bar, there's a relatively strong chance that rotation will continue. And then if these purple bars act as resistance, it can be the top. It's not always the top, but it can be. That's one way. And then particularly when there was divergence here. So what I had said to Sean, the one I was talking about, is I actually took the trade a little early here rather than waiting to make sure it's bearish. And really the best way to do it is to wait to make sure that you get a triangle down here, and I didn't wait, and I paid for it, right? Because it's a sign of bearishness, but in a heavily bullish day, you've got tons of sellers trapped below you, so you might not get any real continuation. So, if it was a futures trade, it would have had to be a scalp, and I would normally look for the person with all the flow, the trader with all the flow, which is here. Looks like that's the best position one. So that low would be your target, best case, for one rotation. So I'd be out of the trade here, and it really didn't trigger until this bar closed. So you'd be in here, out here on the purple bar. So I mean, it's not bad. It's there we go. Entry, the lowest would be like 62, but you could take it on the retrace at like 67, and then your exit is basically the bottom of this. What is that? What, I can't even read it. 40. So 20 points, let's say, almost. And then what's tough about this is for the stop. Technically, your stop would have to go up here, but in this case, you could go to a smaller time frame in this situation. Yeah, you could see this. And then so it's triggered on the 24 here, right here. And on the 24 tick, my stop belongs at 98, which is like a huge stop. Bigger than I'm willing to take with futures. But on the smaller time frame, we had a swing high with triangle up followed by triangle down. So this, in and of itself, is also a sell signal if you're bearish. And as long as you've got an arrow like this pointing down above you or equal to you, particularly when you have a bullish trade that failed because you had triangle down, arrow up, triangle up. That's a super aggressive but strong trade if found at support. This was at resistance and they failed, right? They stopped out. So that location is a good spot to get short anyway. And so when they retest it and reject, and then you get another entry signal, it's a pretty good short in and of itself, right? So you could enter early and then put your stop here, or you wait for the 24 tick to signal at 63 and leave your stop where you would for the other entry, 93. Still pretty darn big. So maybe, well, you could wait and see if you get a pullback like that. So if you get a pullback, now you have a new place to risk off of. So now if you waited for the pullback and you got another sign of aggression, doesn't have to be the same bar, but you'd put the stop above that. So now you can get in at 58 and your stop is 10 points higher. So, but it's not going to work as often because sometimes it's going to crawl back up here and then roll over. But anyway, it would have worked with futures for a scalp. I took it with options and then I was off sides, but then earnings came out and it dumped, right? So overnight we had this big dump. Let me just make sure I get all the lines from today off, so because otherwise it's kind of unfair. There we go. Okay, and then overnight they put in a low here, and was this the low? Where's the London low? It was kind of interesting. This one, yes, maybe not. Yeah, I was thinking this one. I guess it's Globex, not quite London yet. So this was interesting. I watched this overnight. Periodically, I will watch and see what they look like. Sometimes they set up, although it often takes hours for it to work. But on the overnight, I'm usually watching the smaller time frame because it's so damn slow. But the same concepts will work still. It just takes a long time. So here we have a relatively large swing down, right? Like big momentum down. And then we have two opportunities for these diamonds on the inside to work. The first one does not work. It does not give you a triangle, so you really want to wait. You could aggressively enter here because it is a apex trap as well, but it fails. And then the volume shifted down. But then they do it again here, and this one's got a ring, making it a little bit better, and you get the triangle up. So here, you can either enter immediately or mark the area and see if you can get a bounce with a triangle up in that zone, which you get right here. So that would be the other way to get in. The challenge here is with the smaller time frame, you're going to run into sell signals like arrow, triangle up, arrow down, triangle down. That's a sell signal. So if you're still bearish, like you should be selling here, right? But you can see that it doesn't go anywhere, and then you get the reversal, which is actually, I've learned, a really strong buy signal, as long as the higher time frame has some sign of bullishness like this. And if you were just watching the 24 tick, you got the big drop, the diamond, triangle up, and that low never got taken out. So the smaller time frame is going to take, you're going to get more stops, but your stops will be smaller. But you can actually run the same process. You just have to be aware that like those 10-point stops are going to have like a 55 to 60 point win rate, whereas the 20-point stops on the 24 tick might have like a 65 to 75% win rate. Yeah, so here, like you could get in here or here. This is actually probably the better entry since you had this one go nowhere, the sell go nowhere. But note that if they defend this, it's an apex trap. And, well, yeah, let's just do that. So technically, you could also sell this. But again, when they can't take these lows, you've got to wonder if the bears are going to follow through. But you do get triangle up, and then 2 bars later, triangle down. If you think you're still bearish, you can take it, but your target is right here. So, like, why? You know? And I don't think it looks... See, bulls can, like, sustain some sideways and then continue. Bear, like, momentum kind of needs to keep going right away, more or less, unless it's really bearish. So, especially overnight, like, they're going to chop around in here, and if they don't make some lower lows and lower highs, see how they made a higher high and higher low, it's going to be really tough just to sweep this out. Unfortunately, so if this one, the better positioned short, didn't work, you probably don't want to take this one. You probably want to wait until the higher time frame triggers short, and in that case, you need either a trap trader with a bull, a VPOC above it, or triangle up, arrow, triangle down, or arrow above you, triangle up, triangle down. You just don't get it here. There's no signal to be bearish anymore. So you don't have to do it. And instead, you want to see if these stars and the diamonds and the arrows can get trapped, would be my first thought. But I need as we just saw, we need a VPOC above it on a bullish bar. Otherwise, it's going to keep chopping or drop. And you can see that would have had to get a VPOC, the yellow line, on a bull bar above that. They get one on a bear bar, but the bull bars are all below that. So there's nothing to do until that one's pink, doesn't count. So when I say it doesn't count, what I should say is it doesn't mean it's bearish. It's just that we might get a pullback, so it's less advantageous. But you did get star down, triangle. Star down, X up with follow through, and that star killer is usually pretty good as long as you've got shorts trapped, and you potentially could get shorts trapped here. They just haven't quite gotten trapped, so it's a little aggressive. But if these bars aren't pink, it's pretty strong. If they are pink, it's just a scalp. You gotta be ready for a pullback into this VPOC. So whereas on the smaller time frame, like I said, you could have gotten long way back here and your stop never got hit. And when that happens, you kind of don't want to be shorting. Certainly not down here. You'd want your shorts to set up higher. But then beyond that, you've got star down, X up, and then this followed through with a non-pink bar, and you got VPOC above the X. Usually that X is going to hold once that happens. So the smaller time frame I saw got a signal, and then sorry about the jet, triangle down, 2 bars later, triangle up. Now technically I don't want to take this unless I've either gotten above an arrow down, or they're so loud, sorry, or I've gotten an arrow up below me. But what I'm finding is if a bull setup, as a long setup works, that's pretty much as good as bull flows. So if I've got these 2 trades that have not been stopped out, 2 trades to the long side have worked, and I've yet to visit the stop for either of those. That's basically the same thing as bull flows, more or less. What had me keeping from actually taking this trade was that either of those is that the 24 tick had bull flows above us. So this can act as resistance. How far does this go? I guess it's technically here. So that is all resistance, but I could have taken this and exited there because we haven't even hit it yet. It's still a lot of room, but I shouldn't really expect buyers to get through that on the first try without trapping somebody. So I'd have to get out on any side of weakness here because I would expect them to turn it around, and they do, right? So I'd be out of either of those trades. And now that I've rejected there, if I can get underneath, which we talked about before, or yeah, at the end of the day, if I can free one of these bears, I could get a drop. But that doesn't happen until I get a VPOC that's not purple underneath that. And you can see here, once he gets trapped, which happens here, you got a VPOC above the high on a bull bar that's not pink. Now the green line is the line in the sand, and if I want to be bullish, I shouldn't see VPOCs, the yellow line, underneath that green line on bull bars that aren't pink. Yeah. Oh no, I'm sorry. I should not see it underneath it on bear bars that aren't purple. So this bear bar got VPOC above it. That's okay for buyers, bad for sellers. Sellers needed another bar to free him because he got trapped here. We come back into his range, we go through his range on purple bars, doesn't count. They need a retrace and then continuation. They got the retrace, and then that became support. So even though they tested underneath it, they couldn't get volume underneath it on any bear bars. So we already had a good reason not to sell until we got back down there. Otherwise, this green line is going to be support, more or less, on the way back, most of the time. So see how his range, this trapped seller's range, becomes support. So sorry, it's so noisy, sorry. So now that's support, right? And we are above a trapped seller. So now triangle up above purple bars, or above triangle down, or above stars. All of those should start to work as long as we have risk reward. And so now we've even gotten bullish flows. Now it's rare to be able to take just arrow up, triangle up. Usually you need a triangle down here. The exception is when you already have someone trapped. It's just as good. So as long as you are above star down, triangle down, all of those, and there's nobody up here to fight you, you could take this. But normally you should wait. But this one works because of that. And then it continues higher. So once again, if you got triangle up, if it's bullish, it's just going to keep going. But you just have to be aware on the higher time frame where you run into resistance. But it can technically just keep going until you trap somebody. Now we talked about using the delta bars right? And this works in both directions. So right now, this is the high. See that at like 235. So if I mark the delta here, I can watch for bull bars that are higher than that. And actually, this probably would have worked at the low here too. So the bearish bar that was lowest was here, right? And then this bar here had more delta. So if I get a VPOC above that, it doesn't mean buy. It means this low is going to be really hard to beat. So basically, I want to start taking aggressive bull trades like star down, star killer, star down, X up, or triangle down, triangle up. All of those will start working down here because this low is basically defended now by trap sellers. So, and then they do it here too. This one had more volume or more delta, but not as low of price. So once you got over this with VPOC, which happened right here, it also would have told me anything to the right of here that sets up bullish, especially above this level, is probably good. And you get the lift there. So that star, for instance, triangle down, star, triangle up, that's a pretty strong setup as long as you have someone trapped. And based on this delta and this delta being bigger than the delta at the low, more negative, and that bar was here, and my entry is here, and then this bar is here, and my entry is here. So you do good at pullback because this is pink, but this VPOC is probably where the sellers turn into buyers. See that? So if you're aware of those things, you can be pretty precise. So the same exact thing can happen at the highs. So you have to be really careful, particularly when the high of the day or whatever is divergent in volume and lower in delta, because now it's not going to take much delta to create that like vulnerable bull bar, or what I call a last defense. So see here, we actually got more delta than the high. Let me just see if this works on the higher time frame. It should. Yeah, we just haven't triggered yet. And down here, it's this one. See that? This is the low. This delta's bigger than that. Get above that arrow with the VPOC, and any pullback can basically be bought as long as it's got an aggressive signal. So here on the 15 tick, like I said, overnight I'm usually on the 15 tick. It just doesn't move enough to make the 24 tick make sense. So I don't know if it's the close or the high, but either way, this bar was clearly more delta, yet lower price. So now that's like my line in the sand where I can't get VPOC below it on a bear bar that's not purple. Otherwise, it's bearish. Oh, and now it's this one. So now that's the high. So now I need a delta bigger than that. I don't think this one works anymore. It doesn't matter. This delta has more. So now get below this with VPOC and it's bearish on a non-purple bear bar. So right there, I know it's bearish. It's just a matter of getting an entry. Right there, I'd say. Star killer. Probably worth it. I'm below the line in the sand, which was here. I'm below it on the entry. It's probably good enough. Yep. Now, if you wanted to wait for a triangle, which is going to increase your win rate, you get in just slightly lower. On the higher time frame, you haven't gotten triggered yet because you haven't gotten another bull bar, but you did get triangle up, arrow down, triangle down. So on the higher time frame, it's bearish right there. As soon as this bar closes, you could sell any of these prices. So different technique, but same idea. Note here, you had a big buyer, right? The buy flow came in there. So normally, if this creates an apex trap, meaning you get under it, it's got to go under it, and then you come back with a bull bar, and especially if it's followed by a triangle up, you can get a lift. But here you didn't get triangle up and you didn't actually get under it. It was like a tweezer bottom, which is not good enough. And then once you did get under it, you got the apex trap right here. So, and then you got another bull flow. So I'd probably just take this, but otherwise the triangle is going to be higher odds. The problem here is your expectancy isn't very good because this is resistance now because of this arrow that got beat. Oh, but it didn't get beat with anything but purple. I think this is fine. If it gets triangle, I'd probably take it. I'd probably take it anyway, honestly, with all these bull moves. Where's my target? Back up here, I guess? Let's see if it works. Oh, it fails. Right where I thought it would. Right there at the dotted line. It fails. So, yeah, I guess you need to beat this. See, it's close, but the triangle bar doesn't quite get a close above where all the volume was, the dotted line. Or you could look at the VPOC of the star down. Yeah. Oh, and arrow up followed by X is often bearish until you beat that with VPOC. So that's another way to avoid that. Because this is also triangle down, bull, triangle up. So if it's bullish, that'll lift. When it doesn't, we know it's bearish. So you might pay for the information if you're not sure. But when it doesn't, you know it's bearish. So star killer, as long as that doesn't get a VPOC above it, it's bearish, right? And then arrow up, and then the X bar means it's bearish. And then it's just a matter of finding an entry. You could enter there, or triangle up, arrow down, triangle down. That's a much better trade because now I've got expectancy, and I've got momentum. So that should bring it lower. How much lower depends on higher time frame. This. Oh, they were trapped sellers. Right here. That's your target. That's where you want to get. So I would hold until there. And I ignore the bull as long as I'm underneath arrows. Because otherwise that's my target. And that's what I should have done here. I'm technically equal with him, not over him. So ignore it. And I'm out. And that's pretty good location. So now here, this is actually an apex trap on the higher time frame. Let me just erase the lines so we'll start over. So if you're trading pre-market and you went to the 24 tick, whoops. I didn't mean to show that. So here's the apex. You tested below it. You came back in. Now this one didn't have the arrow, which is what you prefer, but this one did. So in this case, I want to be waiting for a triangle up. And now I'm cool with getting long. But if you can't get the triangle, it's just going to run into resistance. So yeah, after an arrow, I really want a triangle. But if the arrow is over here and therefore it's underneath me, right, I'm okay entering on the apex bar. But I need to be above an arrow. And now I am. So I would take the entry there. Now we have to look at risk reward. And on this time frame, we have no trap buyers, but they are probably going to try to defend this and this. So I wouldn't be surprised if this doesn't go very high, but it's probably worth a try. On this time frame, arrow up, triangle up, that's not usually enough. It does have a star. Arrow down, if this was an X, it would be really strong. I don't know how often diamond works there. Usually I want to pull back on those diamonds that show up without a big drop. Yeah, so it doesn't go very far. Does it just get stuck right there? Yep, right where this seller was is where they show up. So, okay, but really just a counter trend attempt. It could just reverse, but oh, these guys were trapped on the smaller time frame. So really, we should not expect it to go any higher than this. And that's exactly where it goes. So it's fine. It's just a scalp. Once you've traded through that, see this got traded through. Now, if we get up there, it's not necessarily going to act as resistance. It could, though. And it definitely will if there was another one trapped. But for now, we've gotten through him now. So the next push-up might actually work. But first the low has to hold. Because this guy got trapped, see that? So if he holds, it could bounce. But we wouldn't want to buy until we get the buy signal. And they just, did they release him? Not yet. Nope. So they can't get VPOC on a non-purple bar. They get big volume at the low. And the VPOC, if you look closely, is above the green line. And then we get apex. No, not an apex trap. It didn't quite touch it. Well, the blue got tested. I would now ring followed by triangle up. If it's followed by triangle up, is usually a good trade as long as it's not super bearish. There. So that is an okay entry with a stop here. Plus green bar, green outline bar, that where the next bar has a triangle and the low did not touch the VPOC, is as long as it closes there, it's usually going to go test resistance. So I would get in here and expect it to come back here, maybe higher. But again, it's pre-market, right? And it fails. Well, it gets 10 points and that's it. So it ran into something probably on the higher time frame that I didn't think of. Not sure. Doesn't really matter. One way or another, if you didn't know if it was bullish or bearish, now when that doesn't continue to your target, you probably want to stop buying. And let's see here. So what time is it? Oh, I'm okay. All right. So now this is still pre-market, right? So I'm not just going to like blindly buy it. This ends up being the low, but unless I've got an apex trap on the higher time frame, let me see. I need a low that was trapped back into with one bar. Oh, maybe it did. Oh, and did it have a blue arrow? Oh, it's so close. Yeah. So apex, so swing low. Blue arrow, so bullish flows. Test below it, right? Only one bar below it, and then the next bar closes back just barely into that range. So on the 24 tick, this is a good potential reversal. If it's this bearish, I will wait for the next bar to enter just to be sure that I'm not like getting totally wrecked. But assuming we get another bar, it's usually pretty good. Now, the only thing is this blue could act as resistance in a really bearish market. So it's not always going to work, obviously. But if we can get above that, it could actually squeeze. So let me just see. I don't remember what happens. Yeah. It gets stuck here. So see, the pink bars say sellers are giving up. But since they didn't fight back, we didn't really get any like confirmation that like, because it doesn't take very many buyers to get through an empty order book, right? And so the pink and purple bars are like, yeah, price is moving, but that's because the order book is thinning out. So it's not bearish to see two pink bars, but it is bearish if they get beat. So I wouldn't necessarily exit right away, but when I saw the bearish flows come in after the double pink, yeah, I'd be like, yeah, this is bearish. I'm done with my scalp. I got my 10 points. I'm just going to drop the runner because chances are, unless this holds, it's bearish. And I'll just wait until it sets up again because I'm going to end up getting back in at the same price as I got out. But I don't have a great way to enter here, unfortunately. Oh, yes, I do. It's an apex trap to the sell side. So just the same thing in reverse. Wait for the triangle if you're not sure. That one stops, I bet. Let's see. I do not. Oh, it doesn't stop. The stop goes up here. So it just chugged along. And then triangle up, arrow, triangle down. Or triangle up and then another bear bar. And then, or triangle up, bear bar, triangle down. Any bear bar. As long as you're underneath one of these bearish flow line arrows. That's a great entry. And it'll probably take the low. But I shouldn't say that because that's not how you're supposed to think about it, right? But here's what I noticed. We talked about how to know whether or not momentum is going to continue. The low here, the delta, even though it wasn't the lowest delta, we haven't gotten any more negative delta. So there's really nowhere that buyers can like turn it here as far as I can see. Not yet. So I don't have any fear that this low is going to hold. But if this one had big delta and then we get over it, I'm definitely not bearish. So this will probably, oh, and this is exactly what's going to happen? It stops. Okay. Oh, no, it doesn't stop. The stop goes above this. It just missed. So you can still hold it. Now, we got a big delta, right? So now, if we get a VPOC of an individual bar that's not pink, like a actually contested bar like this, a bullish bar with a VPOC above this, because it's got such big delta compared to the low, it's not bearish. So even though I would try to hold this short for that breakdown, although now that I think about it, the risk reward wasn't great on it. But if I would have taken it, I'm still in the trade, technically. Oh, wait, no, I'm not, because the entry was here. The stop is here. So this one could have stopped out. It's not a great place to put your stop, though, because you've actually got resistance up here. This was the better place to put your stop, which makes the risk reward even worse on that trade. The way we're taught is if you get in here, you put your stop on the swing before it. But because of the way this set up, really, it's bearish unless you get above this. So you're putting your stop kind of in a spot that's likely to get hit. That makes this less good to because look, your expectancy is like here most of the time, and then sometimes a bunch more, and your risk is bigger than that. So it might work, but it won't pay you very much. So you have to think you're going to break down. I make this mistake all the time. You have to believe that when you break down, that you have a really high chance of like running the table. You need like signs of aggression, buyers trapped, all of that stuff. And that's just for the chance to break down, right? A lot of times, this is exactly what happens, is they pretend like they're going to break down. They take all those stops, the sellers defend, and then it probably drops, if I remember right. So it's a good reminder for me not to even think that this low is definitely breaking. It's a bad habit. And like I said, I'm totally guilty of it. But it's a bad habit. In the same sense that seeing this high and then seeing this triangle after the star, which is sometimes bullish, I shouldn't just be like, oh yeah, that's definitely going to break. Even if it's bullish, right? Like if I go back, a little bit of a tangent, but like I need the practice because, okay, so let's say this is your resistance and you're approaching it, right? And I see star triangle up. It's way out of position. It's nowhere near support. It's not at the bottom of the Keltner channel. So sorry about the jets. But this one's right over the house. It's going to be loud. As long as he doesn't sonic boom, I'm good. They do sometimes. Hold on. He's leaving now. All right. So what I don't want to do is basically get FOMO and get in here just because I'm pretty sure this is going to break, right? It's not good form because in this case, you don't have very good risk reward. Now, in this case, the triangle breaks it and then it rolls over anyway. But the point is, at this point, if your reason for getting in way at the top of the channel is I might get a breakout, is not on process. That is FOMO, right? And so I need to practice that. Oops. I need to practice that and not... I do it worse to the downside for some reason. I don't usually do it to the upside, but the downside, I don't know. I see stars. I think like that's an entry. Even though I have poor risk reward, if this breaks, it's going to go so much lower. Well, when it doesn't break, you're definitely going to lose. And then what usually happens is after stopping you out, they roll it, right? And then you get tilted. So how do you catch this? Well, first of all, you don't take this trade. Even though it sets up right, the risk reward is not good enough. And your stop, this should always tell you something's wrong. If your stop is not behind support or resistance, but it's close to it, you're doing something wrong, right? So like, I'll show you I'm sure there's other examples to the upside if you're not a short-sighted trader. So let's say you want to get in here, right? And you're like, I'll just put my stop here. It's fine. Really? Your stop belongs here because it's not unusual to do that, right? It should be slightly behind actual support. If you can't afford to take it with the stop in the right place, take it smaller or don't take it. Don't put your stop in the wrong place. So while it's nice to be able to have a rule of thumb, like my stop is always 20 points from my entry, or it's always 1 bar behind it, or whatever, what really matters is where are your supportive buyers or sellers, or where is resistance for sellers or support if you're buying. The way you catch this, as far as I can see, you don't have an apex trap off the top. That liquidity never got taken. But you've got an arrow down, right? So I know that I should be bearish. This triangle up, triangle down 3-bar combo, like I said, was too close to the bottom of the channel, and that's going to produce a high that is too far away from resistance. So you really don't want to take this, right? But the only way I can see how to get involved in on process is, first of all, I know that diamond triangle down, if it's bearish, particularly after a big move up, can be a good entry. But a red bar like this or like this, if the very next bar has a triangle and a wick or no wick or a wick that does not touch the VPOC, I know that chances are it's pretty bearish. So here, that gets me in here because I don't know where the wick's going to be on this bar till it closes, right? So if I'm pretty sure it's bearish, I can get in here, put a stop here, and target the low. It's not wrong, it's just aggressive. That one doesn't work, right? It tries, it doesn't quite get to the low. You might get 10 points, but it reverses on you. Now, here it comes again. You would have, let me just wait till he passes. You would have reason to be cautious because you've also got green bars, which are the inverse of that, with the next bar printing with a wick that does not hit the VPOC, meaning it's likely that it continues higher. And it does, right? This is usually what it does, maybe 2 bars. But if this VPOC gets tested and they bounce, it's not bearish. Oh, they don't test it. Well, if this VPOC, because this is also green, and it got a triangle that left the area, right? So our assumption should be it's probably going higher. And it usually goes higher right away, but sometimes it comes back and apex traps or tests off that VPOC. So as long as you can put your stop under support, you could technically get long on a pullback. Well, I don't want to be short at the same spot that I think I should be getting long. So that would be another. And then here, same thing, green bar, triangle up, wick does not touch the VPOC. There's, on a very tiny time frame, there's an aggressive buyer pushing there. They also have stars, which means on this time frame, there's also buyers pushing aggressively. So it's very possible that this just leaves the area. And when it doesn't, like this, I'm relatively sure that it's going to come back and touch that VPOC, just like it did here, just like it did here, and just like it usually does here, but just hasn't yet. So, like I said, that might have kept you away as well, might have kept me away from shorting this, since I've still got a VPOC untested down here, right? Because when it does test, it might bounce. But here, I've got this one untested and this one untested. So if it's bearish, so that would be, if I just saw this, that would be reason to think it's bullish. very early signs that on a micro time frame, they're trying to push out of here. But on this bigger time frame, I have flows to the downside, and now they are getting defended, right? So that is a sign, a little hint that they might be bearish. Plus, this was a red bar. They tested the VPOC. Well, first they left the area, and then they came back and tested the VPOC, and now they give another red bar. And that red bar produces a triangle without touching the VPOC. So most likely what it's doing is coming right there to test this one, and then maybe turns around and tests this one. But if you're paying attention to those little scalp signals, you have, which are just, it's just order flow, right? It's like looking, it's the same exact thing as looking at the DOM and noticing that like people are shorting, and then suddenly like a big aggressive buyer comes in and they can't get back to that spot where everyone was shorting. Like it might not be a long-term signal, but for the moment, that short on that tiny second time frame is trapped. And eventually, if it turns, that's exactly where the market's going to go. And so he gets tested. And if I got in here, I could say, well, I get paid 10 points if I get there. And so I will risk 15 to see if I can go further. Right? Okay, here is the open. All right, I don't mean to do this, but I got a quick take a quick break and just give me 2 minutes here. I just gotta answer a text and I don't want to sit in here and do it. So I will be right back, and then we'll actually do the review for the regular trading session. All right, so I figured grab some more caffeine as well. So, all right. So remember, overnight drop, right? But we opened back inside of yesterday's range. So usually um, that means it's going to be a choppy open, or at least we might visit either the high or the low of the previous day. We open, like I said, just at the overnight low. So, and then there are traders like options traders, for instance, who can't um, trade until the open. So all of a sudden at 8:30 here, you've got new participants, and that's one of the reasons we got this big drop. Is when it was chugging along here, all these guys probably had already made the decisions that they needed to reposition, and then all of a sudden, like, more participants come in and they're clearly bearish. So I don't usually take trades at the open because of that change in participants. You often, it doesn't always follow the rules because, yeah. But interestingly, I've been watching this new signal with the boxes, and when they show up at the highs or the lows of like a swing, especially after a bigger move than 3 bars, um, and perhaps when the delta is bigger on the bar before it. I'm not totally sure about that, but they, if they're followed by a purple bar or a pink bar going up with a triangle, um, it, and yeah, especially if it's a double triangle like this, it has a pretty good chance of actually just like running. And so there's a bull version here, the blue, right? But there's all the delta. Well, I guess there was only 2 bars and they were divergent. So I don't know about that, how that affects things in this case. But if you watch for so like here's one that looked like it was near the low, but not. So here's the drop. If it would have been here, we probably get back to resistance. But since it was like delayed, it just gets stuffed. So by themselves, they're not buy entries. But if they're in position and they're followed by the triangle or the double triangle and that bar is pink or purple, it can at least go back to resistance or support. It can just sweep the range. But yeah, it's something I'm watching and like kind of beta testing. I've taken trades with it and they tend to work, but yeah, it's still in testing. So we get an immediate drop. There's not a whole lot to explain here, unless on the 15 tick we saw something. Let me just check. 8:30. This all happened within like milliseconds. So you wouldn't really be able to participate in these decisions. But you can see, even when it's going fast, arrow up, X down, brings us lower as long as this X is not beaten. And it was bearish. And here's your bearish flow. That becomes resistance, right? They do test behind it and defend it. That's always a good trade, is the apex trap with the triangle down, and particularly across from one of these arrows. That's always good with in position, as long as your location is right, so you have decent risk reward. But here's another one of these blue boxes, and see how immediately they're beat, right? There's no triangle up. But then if you look to its right, it got this triangle up and that lifted it. And I don't know how often that works, but I've seen it before where it's like they try to take it, but if you look underneath it, they weren't able to beat it with a VPOC on a bearish bar that's not purple, which is a very common rule that I follow just because you need rules. So they got under it with price, but not volume. And then they recovered it with a triangle, and especially a pink triangle seems to work. And then they get this lift. So it's I don't know. I'm watching it. But this guy gets trapped, and so he becomes resistance, because it's this and then the wick that it produced before the breaker bar, or the killer bar, the X. So once that's happened, you know it's bearish when it works. So now, and actually we knew it was bearish here too because of this, because we were at or below the arrow. And then remember, triangle up followed by triangle down 2 bars later is also going to be a signal. So triangle up, triangle down, 2 bars later. This one's got star triangle down, which is even better. And another signal that I heard set up that I have talked about quite a bit that I love is when you know the direction and you trap somebody. So like this guy got trapped, right? If you miss the breakdown, which is X triangle down or star triangle down or diamond triangle down, it's usually a breakdown of this when you're bearish already. Oftentimes you will get a star in the direction of the trend with a wick that interacts with the trapped trader, because what happens is they try to return back into the trapped. Remember, the arrows are heavy flows either to the upside or to the downside, so there's heavy flows. He gets beat, and then they try to take him back, but when they get back into that range where all that heavy flow, where it was like mostly bullish and they were aggressive with it, since it's bearish and he's been trapped, those guys are now aggressive sellers. So it's like they've turned those big buyers become big sellers, and so that's why they tend to line up like that. And if you can see it, like where it's almost like a mirror, right? So they were buyers and now they're big sellers, and they are just as powerful, if not more powerful, after trapping them than they would be if it was just like a supporting role, like this, arrow down, star down, right? Gives you continuation. That is normal too. But if you can trap a buyer and then get the star, super powerful. So we get continuation, not surprisingly. Note they try again. So this one got beat by the X, followed by triangle down, and then you get this, right? And then they do it again. Up, arrow, X, triangle down. It's not going to work every time, but if you've got the direction right, it's going to work a lot. And then if I get a star down that interacts with that location, I can sell it again. They missed it on this time frame. We got another buyer here, right? Now he has not been beat yet. And so that could be support. We need to wait and see, in my opinion. My coach would actually take this because we have a purple bar. We're way under the channel and it's beat by a triangle bar with a plus sign. Sometimes they just rip like crazy. The reason I don't like it in this case is because we have this trap buyer so nearby. So it's so common for that to be resistance. So I'm not saying he didn't take that exact trade, but it's a setup that's valid in the room. But I'm not going to take it. This is a much better setup. You get the buyer with the buy signal. They try to get under it. Not the buy signal. It's the bullish flows. And then they try to get under it and they save it within 1 bar. So that's an apex trap. And they work so well when they trap back into these arrow bars. Now, you can wait for a triangle and improve your win rate, but it makes your stop bigger when you're wrong. So here, the stop would be, what is that, 10 points, right? If you wait, see, if you didn't get a triangle, then there's no trade, and you get a better win rate. So you would skip this one, unless you got a triangle. There, no triangle. So you wouldn't get it if you waited for a triangle here. But normally it would be up here at like a 20-point stop, but your win rate improves. This way you'd have to take an original one, otherwise you would miss it, right? If you waited for the triangle, you didn't get it on this time frame. But it's very common to see buyers come in, test below, and then immediately reject lower. On the higher time frame, not surprisingly, and this is the one my coach mostly trades. How come that's not erasing? We get purple bar beat by triangle with a plus sign. So that's Simon's reversal signal, primarily on the 24 tick, because the 15 tick will sometimes not work. I mean, they'll both sometimes not work, but the win rate's going to be higher here. And then sometimes it just runs, right? So if you catch that 6 minutes after the open, like you're set, you know. Now, what made this even better, and he mentioned this in the room, is seeing this star so far down. Remember, that's an aggressive signal. Those belong up here at the breakdown. It's aggressive traders trying to get in like before the drop. When they show up at the bottom of the channel after a big drop, it's very vulnerable. And so all you need to do is get above them and then get trapped. Technically, you need the yellow line, which is the VPOC of the bars, to get above them. And if you want to be more technical, it should be on a bar that's not pink, because it needs to be a bar with some kind of contention, not just sellers just giving up. But in general, if you get above them, it has the potential to squeeze. And then here, on the smaller time frame, you also had a star near the low. Here, right? So even if you didn't take the apex trap, if you marked the star down, which is way at the bottom of the channel, very vulnerable, and then you waited for a VPOC on a bullish bar that's not pink to close, well, right there, you know it's bullish. And so now any of this can be bought, and you're off to the races. So that's also a pretty good setup. Now, since you've gotten the bullish flow signals, we can also take the 3-bar combo. Triangle down, bull, triangle up. So that'd be an add or another entry if you miss the other one. So like there's plenty of ways to do it, right? It's just pick and choose, or which one do you see. Now, whenever you get trapped buyers and sellers like this, I mentioned in, I think it was yesterday's video, this tends to act as resistance on the first test back. Here it was in the beginning, it's usually the back. Right there. See how they come to the back of it and they reverse? And then look what we got. One of those boxes, and it's a red bar, right? So if the very next bar is purple with a triangle and the wick doesn't come back to the range of the VPOC, that dash, it's probably going to drop. And it, see, just like that. So the wick is not very long at all, and it definitely does not come back up here. Usually, this is going to fall to some sort of support here, probably this one, but one or another. It's a relatively strong entry. The problem is, well, maybe it's not a problem, but the thing to know is that when it doesn't work, it means that you're fighting momentum, and you can probably reverse, but you got to be careful not to get tilted if that gets stopped up, right? So I don't have to take them all, but it's a good thing to watch. And if I thought it was bearish on like a higher time frame and I just needed a signal to get in, this works pretty well, because when they work, they just drop. The nice thing is when they don't work, if they don't just drop, you can usually exit. So any buy bar can get me out, which means I basically have a 15 tick stop max. So in this case, the very next bar goes bullish, and I know it's not bearish. So if I thought this buyer got trapped, he's probably going to be resistance. I got a sell signal. I got confirmation. Purple bar, triangle down, no wick. Like, it's hard not to sell that, right? But right here, I know it's bullish, and I can actually reverse as long as I have a target. Now, the other thing you can do that I mentioned before is find the lowest bar, which is, I think, this one. And I don't know about the divergent bars. That one's actually divergent. That might need to be beat. But normally, you take the lowest bar, mark the delta, and then if any bear bars have bigger delta, beating them tells you it's definitely bullish. Well, on this time frame, we didn't. Right there. That one's got bigger delta. So if we get above this, we know it's bullish. What about on the 24 tick? Same thing. This one's clearly the bottom, right? Let's see. Oops, I didn't mean to do that. This one is clearly the bottom. And this one's bigger, more negative. So if we get above 610, we know it's bullish. If we get a VPOC above that, if we beat it, as I say. Getting price up there, that's something, but not decisive. Getting VPOC up there, especially on a bar that's not produced just by thinning of the order book, but an actual bullish bar, not a pink bar, but a regular bar, yeah, it's bullish. It's, well, I should say the bearish momentum is over. So here, triangle down, bull bar, triangle up. Are we above bullish flows? Yep. So it worked here, and it'll probably work here. But look where we are on the channel. We're above it, right? We've been above it. So, and we can't get below the midpoint. So and we have reason to think it's pretty bullish, but this is pretty aggressive. It usually works, but not always. So just be aware of that. And we have not gotten VPOC above this, so it could technically still be bearish. And it gives you one bar more, and then if you look closely, we did not get VPOC above this. We got it on it, but not above it. So they have not confirmed yet at this point that it is bullish. And so this aggressive push should probably be exited since we didn't push that VPOC higher. And certainly if you get a bear bar, you want to be out, because now you're probably going to come back to here. And then you can possibly get another move. But this, if it was bullish, this should have pushed higher. So we get diamond, triangle down, which is an okay short, but we don't really have any clear evidence that it's very bearish. I'd probably just wait. And that's actually the one that drops, not surprisingly. What did it look like here? Ring, triangle down, pretty strong. And we did not get a VPOC above the big delta bar. So still bearish. The bearish momentum is not gone. Okay, I believe it's at 9 o'clock there was new home sales. So I usually don't trade in the next 15 minutes. And I often don't trade in the first 15 minutes either. But if I did, I would have taken this or the trap, the apex trap. But that was in the first 6 minutes. I just didn't have confidence to do it. Okay, so did we retrap him? So this guy, remember, got trapped. Nope, we returned to his level and gave us a star. If it's still bearish, that will drop. It did, right? So that looked kind of bullish. Not surprisingly, we squeezed above him. Right? No new sell flows here, meaning we have to be careful if if bulls get overcommitted, because with no sell flows, it means there's nobody to trap except for buyers. So now buyers can get trapped, or it can just keep squeezing. But there's no new sellers yet that we can just kind of grind on, because to get that grinding up action, you really need new sellers to come in and keep on trapping them. And here we did not get it. And that's a sign when we get these boxes at the top. While it sometimes works right away, it's also kind of a sign that like we might be kind of like getting to like a capitulation point. So I don't know exactly how to use that yet. I was hoping this star lined up with this, but I guess it doesn't. So if this star would have lined up with this, I might have taken it if the wick was there, but it was a little too high. And they come right back into the trapped buyer that got released, and he becomes support. Very normal. Okay. Pink, pink, bull. That's usually pretty strong. Most likely they're going to come take this liquidity more often than not. What did it look like here? Ring triangle down totally failed. Interesting. I would think they're coming for the liquidity, but the fact that we didn't beat that big delta bar makes me think maybe this is just chop. Interesting. Oh, and then red diamond. Like I say, if you get the triangle down, you can just take it for a scalp, or mark the area, and then if you get a triangle down out of there, that can actually be a pretty good short. Let's see if that worked. Your stop, in this case, really belongs up here. Yeah, that's why. Because if you put it here, you get swept, and that sucks. So it's got to be above support. So instead of taking the trade here, once you see it, you know you have a bear opportunity, and you can just wait for the pullback, because usually this guy gets swept, but this one doesn't. That's very common, especially the short side. Now, triangle up, arrow down, triangle down. It's still bearish, right? We never got the VPOC above the big delta. It's still bearish. So I would have taken this if it would have been at the different time, but right here it was 10 minutes to econ, and I'm not gonna do that. There's that blue, right? Gets no continuation, so it's probably going lower for the time being, but watch out if they get higher than that later. Oh, and they got star killer, and that immediately gets tested. So now we know if we get VPOC above that, it's probably bullish. No VPOC above it. Pink VPOC above it. So if the next bar is bearish, we should look for buy orders back here at the VPOC of the X bar. Otherwise, it's just going to run. Okay, so real VPOC, non-pink, bullish, above the X. It's above this X, sorry. So star killer failed, and the blue that got tested got continuation late. And I'm pretty sure, more often than not, that means that this is probably support, but I'm not sure. So they do get a squeeze right into the numbers. So I'm glad I didn't take, because this was definitely a valid trade, and it just stops sometimes, right? In this case, did we have a, didn't have a trap seller. What about in this time frame? No entry on the 24 tick. No triangle down for the entry. And then just lives. There's also triangle down, triangle up. Oh, and there was green below us on the bottom on the smaller time frame. So this one was actually triggering long. Interesting. Okay, so rips. Yeah, I mean, you could take this long. It never comes back to this. Well, not yet. Not a whole lot to do here. You're just looking for like a pullback, basically. Triangle up, arrow down, triangle down. If there's any chance it's bearish, that usually works. Okay. But look, we never took this out, right? So, but there's also no apex trap. So arrow triangle up is only good at support above purple bars. It doesn't work all that often. And here it stops. It looks like it's going to stop. So that's why. It's not enough. But if they trap off of this, if we get under it and come right back on it, it might work. Now look, purple with a yellow square, followed by purple with a triangle down. They try to beat it with a blue one, and then they continue. That's pretty bearish. And we've got this trade still in action. So, and then not surprisingly, this is resistance and star. So lots of reasons to think it's bearish. Now this is technically an apex trap, but I want to wait for a triangle up, and we don't get it. So now these guys are probably going to get trapped, and I want star down. Now, the econ came out right there, but if I can get star down, it's much better. This is technically an apex trap. So if we can, and it's on a bull bar, the bull flow. So if we can get a triangle up, I got this dotted line. I got to get over that. It does by 1 point. I think it's okay. That's technically long. Yep, it's got to get over that dotted line, and it does. There we go. Runs. That's nice. Okay, apex trap, but not on a See, this guy's way up here. That's really where resistance is. This is not a great entry. I don't have anyone trapped here, do I? No. Nope, we got over him and under him. This is going to get choppy. We're in between. See, I need to get under these guys before I can start taking star down. Although diversion bar that can't get any extensions, triangle down is usually pretty good. Oh, here we go. So bull, bull, get under them with a star. That's usually short. And that one doesn't go very far. Oh, because we had this support. Yep. And this X got trapped. And so now he's a buyer. That's probably what this is all about also. So that level becomes very important. Cool. Okay. So don't take these continuation trades into support. That makes sense. Okay. Bear. I don't have a great way to get this unless it's an apex trap or there's a triangle up here. You could scalp it, but it's not always going to continue very far, so why? Ring triangle up's usually pretty good at support, but I'm trading right into this guy. Probably doesn't do much. Yep. Oh, purple, yellow box, followed by purple, a triangle down. Is it bearish? Definitely could be. This could do it. Nope. Gets beat right away. Ring, so this is an apex trap with a bullish flow and triangle up. That's pretty strong. That's got to be a long. Wow. Nope. That fails. Oh, because I've got this guy. I keep forgetting. This is resistance. And I'm right into it, of course. So expect chop if we've got the arrows facing each other. And wait for getting behind one. So do nothing here. I guess I could look for an apex trap and try to trade back into it, but probably not a good idea. There we go. So now we're going to get under him. Much better. Now it should... I'd want a star here down to get short. Nope. It's gonna... See, once again, he's going to be resistance, so I don't think I have anything to do until I get above this or below it. That triangle up, arrow, I need triangle down. There we go. That's a short. I believe I took that one, actually. Yep. Yeah, that's perfect. If you just gotta be patient for the setup. X down suggests continuation. Star down. Star up, X down, that's continuation. Yeah, hold. Okay, now there's the bulls coming in, right? And once again, it's Simon's reversal setup. Purple bar, beat by a triangle with a plus sign. Great time to get out. Great time to flip. Yeah, now if they apex trap under this, you can get long too. Another one. So triangle down, arrow, triangle up. There, enter, long. Boom. Did I have a trapped buyer? I don't think so. And no triangle up here, so this one's a lot more dangerous. It's probably going to get choppy because we're going to run into this. Or it just turns. Triangle down, bull bar, I need triangle up. Triangle up. Did I get above this? Oh, it's so close. This might get choppy. Not too bad. Ring, star, killer. As long as it's bullish, these X's will continue. Yep. Because I trapped that star and then got continuation signal. That's cool. This guy, be careful of him because we know he can become support later. If I'm gonna try to reverse this. There's the diamond at the top after a really big move. That it doesn't always work, but if it gets a triangle down, you usually go back to a support, probably here. Yep, see how it just bounces right off of it. And so again, we're still bullish, right? So you could just do purple bar plus sign. It's technically bullish, but look how higher you are, how much higher you are on this one compared to where you are on the channel down here. You have lots of room here. Up here, your expectancy is like here. Yeah, that's your target, right? Now we can ask, have we reversed? Well, I need a delta higher than that on a price lower than this. And then I don't want to be bullish anymore. So in this case, we wait. We trap him. Unless we reverse right here. Oh, purple bar. We can still reverse. Nope, we've trapped him. Yeah, but no real entry here. That's too bad. That was a tough one to catch. Okay, back to this previous point of control. Not an entry, just makes sense that they're sitting around here. Is that lined up with a bull? No. No reason to take that star then. Not good enough. Oh, triangle up, triangle down. 2 bars later. That's good enough. Star down, diamond up. Not an X. We want an X here. Okay. Triangle up, triangle down. I'm not under a seller, right? I don't have any yellow arrows. Maybe I am. That might work. I think I am under a yellow. Okay, star, killer, if I'm bullish. Have I trapped a seller? No big sellers. Star, did I trap him? I need a VPOC above it on a non-pink bar. It's bullish. Nope. So this one I'm going to skip because it's not super bullish. Triangle up, arrow, triangle down. That's a sell. Nice. Okay, there's an apex trap. Right, so you could buy that, but your target's here. So it's going to get choppy. Or it just rips right through it because of, what's it called? FOMC. So that's where that all started, and that was the sign that maybe it wasn't bearish anymore. Look, you get a pullback with the blue box, and that gets continuation. Now, does this become support? Yep. Cool. Okay, neat. I forgot to look for the delta. I don't think I got it up here because it just like, this was the high and it just dropped, but it's this green bar. It's gotten more delta, right? So if I get a bear bar under that with VPOC right there, that's it's bearish. So really what I want is a pullback and then a drop right there. Triangle up, triangle down. I need an actual entry still, but this is the sign that that bull momentum is gone. Yeah, it took a while, but eventually worked. So where is the low? Right here. So this is, yeah, okay. So that's your price-wise, your lowest delta of the rotation. So do I get a sell delta bigger than that? Because that would confirm that it's right there. So get above this with VPOC right there. Now I need a bull entry. Right there. Apex trap. So now triangle up to be confirmed. There. And purple bar plus. Boom. Cool. That actually works even during... That was just during FOMC, like the minute after. Obviously not tradable, but cool that it actually works. Okay. Arrow down. X down. Continuation. Star. Killer. Continuation. Ooh, that one gets trapped. That's right. This is the one we did. Oh, no. This is still 4 minutes after. So this one gets trapped. This one gets trapped. So now that's support. Oh, I don't have a lot of time here. This gets trapped here. And so now that's a buy. Yeah, I gotta go. Boom. Off the low. Arrow. No triangles. That's hard to take. Star, killer, gets continuation late, but not much. There, arrow, star, killer, continuation low. Yep. Big delta, or low delta, I should say. Is that the low? Yep. So now this one needs to get beat, and it does right here. So now any bull entry. Oh, they just left it. Star. Oh, no star. Wrong direction. That's too bad. I don't see much. Arrow down gets immediately beat. Yeah, that didn't really set up the way I want. Arrow down gets beat by next. That's usually continuation if you know the direction. Triangle down, triangle up. Triangle down, triangle up. It's way above the channel. It's pretty dangerous. It does work a little bit. Star down, triangle up. That's probably the high, huh? Nope, keeps going. So see, triangle up, arrow, triangle down, gets immediately stuffed. We know this guy's trapped. So they're going to need to get under this to be bearish. Otherwise, triangle up above it, probably good. See that? Not for much. Okay, that's the... Oh, I guess it just snuck underneath. Bastards. So they test this. Maybe? Not even. Lower high. There's the apex trap. Boom. There's an apex trap. That one didn't do much. That's dangerous. Yeah, something's up. That one didn't quite apex trap. Triangle down, triangle up. There's that box again. So be careful with that high. Triangle up, triangle with arrow, triangle down. That's low. And then arrow up, X in a bearish environment, going lower. Okay, this is going to create chop or resistance. Yep. So that triangle down is probably pretty good. Ring triangle down because of the trapped guy. Yeah, and then this too. Okay. That all makes sense. X got beat. Star way deep. Oh, they can't beat him. Arrow down. X. And this would have continued higher if it was bullish, so it's bearish. Wow. Tricky. Okay, big flow. And purple behind you. Watch for an apex trap. Right there. Enter. Long. Oh, they do it again? One more time. Long. That's neat. That's pretty cool. Okay, so this is the new low. Ooh, really high delta. Really high delta. That's going to be hard to beat. Triangle down, triangle up above the flow. That one, yeah, looks like it stops. Star killer underneath the flow. Wow, that one stops. Triangle down, triangle up. After that stops, that should be good. Oh, but only to here. So this just gets so choppy that you just have to stop. I freaking need to remember that. All right. I wonder if dot arrow triangle down might work. That makes sense. Okay. This one just kind of... I wish this purple bar was here because this just kind of lifted. I guess it's okay. It's not always going to set up how I want. Interesting. Just all by itself, purple bar. Okay, and this is where we were trading with the trap. Yep. Okay. So that's that. I gotta go. Sorry this got so long, but at least we covered a bunch of stuff. And hopefully if you've watched like this one and the one from, or the one or two from last week, you'll see that like it's just the same thing over and over again. It's just a matter of knowing what you're looking for and just look for it and do it right. It's obviously still like you're still going to have losses, right? Even with a great process, you're still going to have losses. And the real challenge is to stay on process when you take a loss. So I did that today. And if you want to learn how to do it, contact my coach, Simon. Trade letter N word